What's up, Master Kim?
Hey, what's going on, John? How are you, sir?
Nothing much. We have a special guest here today, and I figured we start off by having you kind of give us an intro on Mr. Scott Linton. You give us kind of intro, your background, how you worked with him in the past, and then we bring him up and we get this conversation started here.
Yes, absolutely. And John, thank you for putting time aside today. During our previous podcast that we've spoken about small business, and often we kind of recircle right back to where do business owners get the money? And that's always kind of a magic question because all these businesses are different and whatnot. But from the cut of earth that I'm familiar with, both from either the single store owner that owns maybe one gas station or multiple, or the supplier, a guy that owns like 20 to 30, his partner I and Roger were part of. We've used Scott Linton, the gentleman that's going to come up in a minute, and he has a financing company called CAPCITY Finance, and his website is literally that, CAP Finance, that's CAP, which is funny because if I'm not mistaken, CAPCITY Finance, we've used him multiple times, and not only have I used Scott's business, but I've used it with several different partnerships. One with me and my business partner Raju Bhai, that we own a bunch of gas stations, but then two with I and my business. We have a gymnastics facility in Middle Georgia, and my wife's business. We were able to guide her with Scott to borrow money. So, what type of money we're talking about? Certain times it could be operational cash flow, but in the situations with Scott, we've borrowed money just to buy equipment. Cars or helicopters, nothing like that, just physical business equipment. Scott is a pro at this. He understands whether it be hotel furniture and equipment, restaurant equipment, and in the situation that I was in, it was convenience store equipment, the gas pumps. When you go to a gas station, I think today about $21,000. Average gas station has 4 pumps. The cash register system was very expensive. The tanks underground, so very expensive stuff. And I was able to, in many situations, borrow up to $250,000 or about $180,000, many different times. Stations, and Scott was the one that funded us through it. And Scott will tell the particulars. So I don't want to talk about his underwriting process, but it was a very quick process. Many times the biggest thing is that we're in the process of getting, so for example, to Scott maybe about 2 months ago, but before coming on the podcast, because Scott has always been like almost like a family member that I put my fillers out there. And my question to Scott, John, would be, okay, if prime is at 8.5 at the time, what is the lending market now? What's to get the barometer where we are today to borrow money. I've not had to borrow money from Scott in probably about 36 months. Even my last loan was through COVID and we never missed a payment. So we've retired that loan. So I reach out to Scott just to put some fillers out there. What is the temperature in funding today? And Scott kind of sets me good, what's bad. So my wife and I are applying for SBA loan, but there's a gray area between getting SBA funding, and we need liquidity in our hand today to whether it be lease out a new facility or buy some new equipment that has nothing to do with our SBA funding. And then rather than drain off, I would and my wife would take our business to Scott to get maybe $160,000 loan, while he knows that we've got an SBA loan. Unless SBA loan minimally could take about 90 days. So the quickness of how he's able to approve loans and disperse. But with that being said, we'd love to have Scott come on board and have some dialogue going on. John, would that be okay, or whatever your thoughts are?
I think you laid the groundwork pretty well in terms of the rapidity, how fast you get the money from Scott versus SBA is very important. And that's one of the reasons why I think it'd be good to have him on. He can kind of bridge that link there. So let's bring up Scott and let's give him a.
John, your volume is kind of low. I don't know if
All
others
right,
are
we're going
getting
to
that
bring
by
up Scott.
chance.
Yeah, I had to
Okay,
turn it up.
there we go.
And then it's give him a welcome virtual applause here. I'm going to see if I can change it up, maybe make him the solo layout. Of course, if you know how to do that, maybe make us the minor people. Yeah, maybe if we can put him to the side, put him. Yeah, there you go. That's perfect. Portia knows everything. Hey, Scott, how's it going? Glad you're able to make it to the Urban Landlord.
Thank you, John, and thank you, Master Kim, for that introduction. Very much appreciate being a part of this. And
yeah, Scott, and
about,
sorry,
go ahead.
Yeah, I've just summarized 12 years of dealing with you into like just the last 5 minutes. I hope I didn't miss anything.
No, you did. You did a great job. Me and Master Kim go way back. Just a really brief introduction on myself and where my backstory falls. I've been in sales and finance since I got out of college in the late 90s. The first half of not really the first half, but throughout my 20s, I was a commercial and residential loan officer that focused on mortgages. So did mortgages. I was in the mortgage game when all the crazy subprime stuff was going around. And I was in the mortgage game until the great housing recession of 08, 09, and it basically wiped out the whole housing industry. So that is what led me into really just kind of stumbling into the equipment financing and commercial credit world, which I entered at the very end of 2009. And I've been in that space ever since. Ended up meeting, Master Kim there shortly thereafter. Have been in this space now for about 15 years. I've owned my own company, CAPCITY Finance, for the last 3 years. Prior to that, I spent 10 years at a large national lender, focusing mainly on retail. I did a lot of gas station and convenience store financing, as Master Kim mentioned, but we also really would do anything that was direct to the consumer: hotels, nail salons, automotive shops, you name it. We would help those owners and going into this, it's important to make note that where my company fits in the landscape is we focus on financing equipment for business owners. That's number one. That's what takes up the majority of our time. And then we also have a product called working capital that I'll talk about, which is short-term lending for these business owners that may not necessarily be tied to a piece of collateral. Things like taxes, payroll, inventory. Maybe they want to remodel their bathroom. None of those are tied to any kind of hard asset like a gas pump or a pizza oven, but we have the ability to give that business owner short-term access to capital, for those needs. And so those are really the two main areas that my company focuses on. We don't really dabble in real estate. We have companies that we know that do both commercial and SBA real estate lending. But as Michael mentioned before, that's a completely different product that's out in the market space. And if you want to have success in the financial services world, you really need to kind of focus in one area. So if you're a real estate guy, you need to focus on finance and real estate. If you're an equipment finance guy like we are, you need to kind of focus in that space. And so we've carved out this niche for ourselves. But some of the unique things about equipment financing are about 80% of all equipment finance deals that are done, regardless of the size, are ran through companies like myself, which that surprises a lot of people. A lot of people think that it would go through their local bank or their local credit union. That's not the case. Equipment lenders like us finance the overwhelming majority of any and all equipment that would go inside or outside any type of business, commercial, industrial, retail, medical, etc. The reason for that is your local bank or credit union just does not have an appetite for financing FF&E for a hotel, which is furniture, fixtures, and everything else, or financing a pizza oven. Banks and credit unions really want to get into the big dollar amount stuff. So in a lot of cases, even if you have a long-standing relationship with your local bank and you go to them, they just don't have an appetite for financing the smaller deals. And so that's where we fill that void, is to be able to come in and offer quick, easy access to capital to get the equipment that the business needs. And, you know, that's where we fit in the space. So it's important to note that, you know, we're not trying to compete with or replace other banking or lending relationships that a business owner may have. We want to stay in our lane and be the best that we can be in that particular space. And I'm happy to talk about obviously what we do and give your listening audience an idea of what we do, how you qualify for this type of lending. But I also have, you know, a decent amount of knowledge on some of the other areas like SBA that Master Kim mentioned, which is really a great product that's out there, as well as other aspects of commercial lending that we don't really do, such as real estate financing.
Hey, Scott, can I ask you one question to clarify, probably for the audience that typically look at the banks for financing and don't think of companies like yours? Why are they not interested in, say, the mom and pop lending of, say, a pizza oven, as you mentioned, as an example?
Right. So there's a couple of reasons for that. So typically banks like to carve out what they like to lend to. Okay. And it's important to make note for your listening audience that there's really two types of banks in the US. Okay. You've got your big corporate banks, Bank of America, Wells Fargo, Truist, Regions, etc. These are your big corporate players that you find around the country. Okay. And then what you have is the majority of banks are not corporate, like I mentioned. The majority of banks that you're going to find, and credit unions for that matter, are what's called community-based lenders. These are the smaller banks and credit unions that you see all over that may only be in a certain city or in a certain state or in a certain region of the country. Okay. And the small community-based lender makes up about 75% of the banks in the country, where the big corporate banks, you know, only make up, you know, 25 to 30% of that. Now, the big corporate banks have no interest in really doing anything but just loading up on deposits, doing personal loans. And unless you're just a very, very well-established company with 10 years in business, 100 employees, and a significant portfolio, your Regions and your Bank of Americas and your Wells Fargo is just not going to do business with your average small business owner unless they just want them to manage their, you know, checking account. I mean, that's essentially what it is. A small community-based lender, part of their banking charter states that a good portion of their deposits that they have on file have to be lended out in the local community. That's why they call it a community-based lender, is most of those funds are allocated to the local community. Now, what they don't tell you is the vast majority of that money goes to new construction. That's just the nature of it. Whenever you see buildings going up, big, small, gas stations, hotels, whatever, the vast majority of that is coming from community-based lenders. So those are the type deals that they want to involve themselves in. going to your local bank or credit union and saying, hey, I want to finance a $15,000 pizza oven. What they're going to do is say, we can give you a personal loan. And a lot of people take that, but you're really financing that more through your personal FICO score. You're not financing that through your LLC or corporation. And again, there's one-offs where you may find a local bank or a credit union that will do these smaller, equipment type transactions. But for the most part, they just don't have an appetite, nor do they really even have a credit product to offer someone with an LLC or corporation $20,000 to buy something that they may need, such as a forklift for their warehouse, etc. So that's where there's a void in the banking universe that the commercial credit lenders like myself fill.
I see. So if you see a restaurant or pizza shop, something like that, by and large, they've gone to a commercial lender like yourself at some point.
That is correct. If they're dealing with somebody on the finance side, there's a very high likelihood that they're working with a company like myself or one of our competitors. Because again, their local bank or credit union just doesn't have an appetite for that. Now, SBA, what Michael talked about earlier, which is the Small Business Administration, there are a lot of folks that take out that type of financing, and within that approval, they will factor in the cost of equipment and other things that the business may need. So SBA is its own its own universe. You could spend a whole hour just talking about SBA and what it's able to offer to small business owners. But yes, John, to answer your question, the vast majority of that equipment comes from companies like ours.
Yep. Hey, Scott.
Yes.
Yep. Also, if you could mention about some of these small town banks, also, they have a cap. So for example, $1.7 million, $1.5 million, whatever it is, there's a cap. And if you're doing, for example, a Dairy Queen, that's it. You borrowed that money, you're done. But most people are obligated to do multiple Dairy Queens, for example. Where are they going to get their money? So what I've noticed is a lot of store owners and even specific communities come to Scott a lot because their thirst to grow multiple locations, whether it be gas stations, liquor stores, tanning salons, you name it, kind of outpace their credibility with the one bank. And that banks do have a cap. One individual, their risk is to go up to maybe $1.7 million, and that's it, or even much lower and whatnot. So by being able to use companies like Scott, or specifically Scott's, it takes some of the pressure off. And keep in mind, many times when you see these businesses that are updating, so you could be a Circle K franchisee or many of these other Burger Kings, you've got to remodel. If you don't remodel and bring it up to the new current look, they will reject your franchise agreement.
Yes, they will. Yes, they will absolutely.
So that's where Scott comes in.
They will replace you as the franchise owner, and they have the right to do that. If you do not, as a part of your franchise agreement, you have to buy whatever new equipment they say. You've got to remodel your showroom when they say it. That's all part of being a McDonald's or a Burger King. So, and that cost is laid directly upon the business owner. And that's why companies like myself, we partner with the Domino's Pizzas of the world and the Zaxby's, which we were talking about offline, and the other franchise restaurants out there, is because those owners are always being asked to be able to update things as a part of their franchise. And our product being so quick and easy just makes it a no-brainer for that owner, because most types of commercial banking is an arduous process. An SBA deal, for example, is about 90 days. And I'm being generous when I say that. It could stretch well beyond that. And even a commercial credit deal where you go to a bank and are looking to do something, you're talking about, months with an S at the end to do that type of deal. With us, I can literally approve someone for financing and have that deal completed in as little as 24 hours. So the difference to how quickly we can access capital and how much easier our process is, it's night and day in comparison to what a traditional bank credit union would offer. But to Michael's point, SBA only allows you to have 2 SBA loans per Social Security number. So they limit you as far as having 2. And then you're right, banks have lending caps where you may do one Dairy Queen with that particular bank, and that's it. You're you're done at that bank. Now, that doesn't mean you can't go to another bank, obviously, and apply there. And that's what a lot of people do. But you're absolutely right. You run into a threshold. One thing that banks also will do is banks cannot discriminate individually. They can't discriminate on someone versus per their race, their creed, their age, whatever it may be. They just can't discriminate for a million different reasons. But what they can do is they can discriminate on industries. Okay. So they may not be able to discriminate against you, Master Kim, but they can say, as a bank, we do not lend to convenience stores, or we don't lend to construction companies, or we don't lend to trucking companies, for example. Okay. So as opposed to discriminating against an individual, they discriminate against industries. And that is very, very common and prevalent in the banking industry.
Hey, Scott, do you mind if I add a comment? Because this is very important. So back in 08, 09, when everyone had the stink touch, no one could get an SBA loan. No one. The only funding that we could get was from Scott and his competitors. That's a fact. When the economy collapsed, you could not get an SBA loan. It was very stunning. And there were situations, but just like what Scott said, hotels, convenience stores, laundromats, strip malls, there was a basket of lists that the FDIC put together of industries do not loan to. And the banks went and tried to balance out their balance sheets. Well, convenience stores were in that basket as well. And the only avenues that we had to get liquidity to grow, or even liquid for cash flow, was Scott. And one thing I did want to mention is the average American we're all Americans on this call. But the reason I say this is people that were, I better not clarify that, but the average white and black business owner think that maybe they just get their SBA loan, and if they play right and work their business and hire the right people, they're going to succeed. That is a misnomer. You are always going to need access to capital to get through the ebb and flows, the ups and downs of businesses, because it isn't that you're going to have 3 years of profitability. You're going to have 3 months of no profitability, and to fight the ebb and flows and the remodeling and the updating of equipment, or a little bit help with your second location, a tanning salon, for example, that's where the Scots come in, is they help with those ebb and flows. And the reason I say the difference between the Americans versus maybe some of these other cultures are wildly successful is they understand that. And that's probably the reason that I had met Scott, is because of the Patels that dominate the industry I'm in were constantly mentioned, oh, you got to get a hold of Mr. Scotty. They call him Mr. Scotty. They don't probably even know how to pronounce clearly his last name. And I'm like, who's this Mr. Scotty guy? I expected to see some like 70-year-old old school Georgia guy, but Scott, young guy, UGA, you're UGA grad, or what school? You went to Alabama, right, Scott? I'm sorry.
Yeah, correct.
Yeah.
Roll Tide.
Okay, so I was stunned to see this young guy Scott lending all this money, but in the industry that involves, I'm going to say, whether it be the Asian Americans or the Vietnamese or whatnot, they're all using Scott and similar companies. Because the economics make sense. They like the fact that they can get funded within a very small window. And again, Scott, you can get into what your underwriting things are. And this podcast is really not made for like startup people at all, as much as once people do get in business, they have to be visible. You can't,
Yeah.
and this is where you fit in, because a lot of businesses don't succeed beyond the 3-year threshold. And sometimes, and I know, Scott, when you gave my wife and I the loan, we borrowed money from Scott back in 2020, and it was a substantial amount. And Scott was able to put something called soft money in it as well, because not only were we buying equipment, we also wanted to relocate a door and, redo the whole drywall. That stuff that's more construction related. Well, Scott's an equipment lender. He was able to carve out the soft costs so that we could do some construction, but the bulk of the loan was on equipment or whatnot. But I'm so sorry, Scott. I just blathered off for about a minute and a half straight. But
I wanted to comment on that, Master Kim. For the people that that come on the panel or they have questions about SBA loans, an SBA loan wouldn't have done that for you, or it would have been very difficult to get something like shifting some soft costs into hard costs to allow that loan to go through. I've never gotten an SBA loan, but I've worked with people with SBA loans, and the terms seem to me to be very rigid, even on the equipment that they could buy. I want to say that they either had to lease or buy new equipment. So there was some rigidity in terms of how they had to do their business and things they had to buy. What about the terms for you, Scott? Are the terms for the loan rigid?
Yeah. So what I'll do, John, if you don't mind, is one of the most important things that I'll mention during this podcast is going to be what we talk about next, which is how do you qualify? Okay, because that's the number one question that I get all the time is, what do you need to do to qualify for this? And once you qualify, kind of the world sort of opens up to you. But it's very important to note, as a commercial credit lender, we do have very rigid underwriting guidelines, kind of like what you were saying with the SBA. So what I'm going to say to your listening audience is applicable across the board. Okay, so this isn't just the Cap City Finance rule. What I'm about to say is applicable anywhere you go at any lender in the entire country. Okay, so in order to qualify for commercial credit financing as a business owner, you must have 2 years in business. 2 years. Okay, and that's verified. The first thing we're going to do when you apply for financing is we're going to pull your business filing. Every state in the country registers their business filings with the Secretary of State. Everything now is internet-based, and you can pull up that business filing within literally a matter of seconds. Okay. We'll talk about in a minute what someone that doesn't have 2 years in business is going to be looking at. But the number one rule that you need to take note of is 2 years in business, because it all starts and ends with that. People think just because they have an 800 FICO score, for example, or maybe they have a $100,000 in cash in the bank, that somehow that's going to lend them to an easier path towards an approval. And quite honestly, that's not what we look at. We absolutely do look at credit, but the first thing we look at is time in business. Okay, so once you hit the 2 year mark in business, then the world sort of opens up to you. Okay, and that's when you're going to start being able to qualify for a variety of equipment financing. Now, we have a one-page credit application, and that's why our process is quick, easy, and to Master Kim's point, why so many people like to work with us, because we really try to dumb things down and make it as easy and painless on the business owner as possible. In this particular case, the credit application really only covers 4 things, which is really all we're looking at to determine what somebody is eligible for in terms of financing. We've already talked about time in business. We're going to get that by the business owner providing us their LLC or corporation so that we can pull the business filing. The second thing is we do a soft or an invisible credit pull so we can see what their FICO score and liabilities are. Obviously, there's FICO score requirements. If you have under a 600 FICO score, you're just not getting financing. Really, even if you have a FICO score in the low 600s, you're probably not going to get it. Typically, 640 or higher is the range you sort of need to be in terms of your personal credit to be able to qualify. And obviously, the higher your credit score is, the more favorable the rates you're going to qualify would be. The third thing that we look at is most business owners are not aware that their LLC or corporation has a business credit report. Now, your business credit report may have nothing on it, or depending on what type of business you're in, your suppliers, if you're buying and getting net terms from companies that you work with, they will report whether you pay on time or not. Also, as a part of your business credit report, there's a PayNet report, which tells us if you've ever financed anything through your LLC or corporation. Now, it doesn't tell us who you worked with, but it does tell us that you took out a loan. In the case of Master Kim in 2020, you took a loan out for $150,000, and it really just says whether you made your payments on time or not. So it's just a quick indicator for any other lender to say, oh, great, these people are not new. They financed through their LLC before, and that's what that commercial credit report does. It also shows us if there's any sort of liens, judgments, or any other litigation that we should be aware of. The last thing we look at is the collateral itself. We want to see, what are you wanting to finance? What is it? Is it essential for the business or not? And who are you working with? Just like we have to approve the customer for financing, we also have to approve who they're wanting to buy from. So if you're a business owner and you find a great deal on Facebook Marketplace and you want to finance it, sorry, we can't do that. You would have to buy it from a company that sells restaurant equipment, gas pumps, nail salon equipment, etc.
Hey Scott, can you explain why that is, by the way, to the audience?
Well, it's because we pay them on the customer's behalf. Okay, so even though the customer may have been approved for $50,000, we're going to pay that particular vendor on the customer's behalf, and we have to feel confident that when that money is sent to that vendor, that they're going to provide the products and services that they've stated on their invoice. You know, once a deal is done, the customer, you know, the vendor gets paid. Their money is paid. They're on to the next deal. Us, the lender, then is on the hook to get the customer to pay us. And so we're gonna look at that deal to make sure that the risk of default is as low as possible. I just had a deal literally yesterday that fell to pieces. It was a big deal in Texas, and it fell to pieces because the guy brought us a teeny tiny company that he was wanting to work with, home base, no website, no information on them whatsoever. The only thing they had was a LLC filing with the state of Texas. And when we explained to him, listen, you know, we can't work with them, you know, just like we have to approve you, we have to approve them, you know, and that was it. He was insistent that he wanted to work with them. And I'm confident in saying no one in our position would be willing to approve a company that's that small. So obviously approving the customer for financing is critical, but also approving who they're wanting to work with is a part of the underwriting process. And again, all that goes into risk and default. You know, we're just looking to try to make sure that the deal is clean and that they're working with someone who is selling legitimate equipment, who's going to service the equipment, who's going to ship it to them if they have to order, etc. So large reputable companies are who we like to deal with.
So it's kind of protecting the lender and the lendee in this case.
It is. And I tell people all the time, listen, you know, we're looking, as much as we're looking out for ourselves, we're looking out for you, you know, because a lot of times the customer will bring us these vendors and we have to say to them, hey, you know, we're not comfortable with these folks. Are you comfortable? You know, and sometimes it takes them sort of looking at it through a different lens to realize that, yeah, you know, even though that guy's price may be good on this walk-in cooler, he's much better served going with someone else because this guy may go out of business next month or next year. Or
So
can he warranty it?
So your concern in that case would be you bought a cooler or something, and then you need maintenance on it, and the company's out of business.
That's correct. And most customers, you know, our terms, John, to answer your question, we offer a 1 year, 2, 3, 4, and 5 year term if the customer's financing under $100,000. So, and most customers go with a 4 or 5 year term, you know, because they want the lowest monthly payment possible. So if we finance somebody for 5 years or 60 months, we're going to want to make sure that over the life of that financing, that vendor is going to be you know, around to offer them warranty work, service work, etc. So we do our due diligence when it comes to who the customer is wanting to work with, and the vast majority of the time they're working with reputable companies. It's, you know, it's the one-off that we see where they're dealing with someone who's literally working out of their basement and has basically just a business filing is it. They have nothing else that could lend credence to the fact that they're, you know, a business owner that's selling whatever widget, gadget, or gadget that they're trying to sell. So, but that's what we look at. We look at time in business. One, we do look at their credit score because obviously the better FICO score, the higher likelihood you're going to have once you meet the 2-year requirement of getting approved. We do look at the we look at the business credit report. One, just to see if they have any pending litigation. And have they financed through the business before, how they pay their vendors. That's where you'll find a Dun & Bradstreet or a D&B score. A lot of times people hear about a Dunn's report or a D&B score. That would be listed on your business credit report, okay? And the two main...
Go ahead.
Yep.
Oh, we have a question on the screen.
Okay.
Do you help find the right FFE products too? You mentioned FFE earlier.
Yeah, we can, depending on what industries it is. Like, for example, I do a lot in the gas and convenience store space. And so if someone came to me and said, who do you recommend me buying my gas pumps through? We would have a litany of companies that we work with. The same thing with FF&E. We've done a lot of hotel financing. So yes, we have the ability through our own networking to put customers in contact with companies that we've had good success working with in the past.
The next question is, so do you make them take out insurance on the things they buy for their business? And I have a question before you answer that. Is this equipment collateralized? Do you hold like a lien against it?
Yes. So there's an individual UCC filed against the equipment. Okay. Now it's important to note that most businesses have financing on them, whether the customer's leasing the store from the owner or whether the owner owns the building. For the vast majority of deals we see, there's a bank involved, meaning they're financing that commercial property. The bank has what's called a blanket lien. It covers the land, the building, everything inside. It covers it all. But where we're able to come in is we file an individual UCC just on that pizza oven or just on that gas pump. And that doesn't interfere with the primary lender's blanket lien that's on the property. But yes, on every deal that we do, an individual UCC will be filed against their LLC or corporation. And within that UCC filing, it will literally say invoice number, whatever, and reference to the individual items that we're financing. And that way, if the customer goes into default and the equipment has to be repossessed or whatever, we have that as a part of the deal, because our only skin in the game when we finance these deals is the equipment. Now, the customer does sign a personal guarantee, which we can talk about, but in most cases, the second the equipment is delivered, it's a used piece of equipment and is a depreciating asset. And the longer they have the equipment, the less it's worth. So our only skin in the game literally is that equipment and a personal guarantee. As far as the question on the screen, yes. As a lender, the business owner owns the equipment day one, but because we file that individual UCC against it, they are going to be required to carry insurance on that equipment. Now, most business owners already have an existing insurance policy, and it's just as simple as notifying their insurance agent that, hey, we're financing this gas pump. They add it to the policy. There's no additional charge or anything like that, but they will list us as the lien holder on that individual piece of collateral. So yes, insurance is required because we've had stores burned down. We've had stores be destroyed by tornadoes. We've had stores that have been flooded out and equipment has been destroyed. And through their insurance policy, we were able to work with the business owner to make sure that that equipment that we essentially financed was replaced.
And the insurance in that case also helps the owner who's financing it, because he would still be on the hook if he didn't have insurance. Right?
That is correct. That is correct. So as a part of our process, we ask the customer up front who they deal with on their insurance. Now, one of the little tricky little sneaky things that is done in my industry that I don't really agree with is they do force-placed insurance. They don't even tell the customer when they finance the pizza oven that they need to add it to their policy. And then within about 60 days, the customer's wanting to know why their payment jumped up, $20, $30 a month. It's because that lender, as a way to put more money in their pocket, is putting a force-placed insurance policy on that deal. And it's in the fine print of the contract that you have 60 days to provide us with your insurance information. When I started my own company 3 years ago, one of the things I wanted to do was to tell every customer we work with, hey, you need to get insurance. And we ask for their insurance information even before the contract is signed off on. So we let them know ahead of time so that we can avoid that force-placed insurance being placed on their account, because it will be required. Trust me, if you do not provide us your insurance, after usually about 60 days, your payment will increase some for that insurance charge being added to your monthly payment.
And that insurance is typically higher than you could get yourself, correct?
That is correct.
It also tends to protect the lender and not necessarily you.
Definitely protects us, because again, if that station was to catch fire or get hit by a tornado, flood, whatever it is, we're gonna be made whole by having that insurance.
Any other questions in the audience or Master Kim?
Yeah. So Scott, one thing that I think is kind of comical, and I hate to keep on going back to 2008 or 9, but that before that time span, if you were a third-party lessee that you didn't own the real estate, you could still go to SBA and get funding. But since the real estate collapsed back then, traditional funding with banks would be very loose, or it would be not like it was before. They give you the third degree if you're a third-party tenant lessee, versus Scott comes in, he doesn't need to see the copy of our lease, doesn't need to see the copy of our bank statement. That's number one. We don't have to show him financials, at least if we kept it below 200 and something thousand, and we did keep it below that. But that was very important to us but also to the community that I mentioned a lot, with the Hindu Asian American community. They just don't want people knowing how much cash flow they got coming in their accounts. Unlike SBA and other loan options, you have to show them minimally 12 months bank statements, or at least 6 months bank statements. So that was very important of why people started to use Scott a lot more, is that it didn't matter whether you were a tenant in a third-party property, that you could still get funded through Scott, no bank statements. And one thing that I thought was really funny, and I don't want to over-exaggerate, but it kind of reminds me of the Amex Centurion Lounge at the Delta Airport, at Atlanta Airport. The minute you walk into the Delta Lounge, they treat you a certain way. The American Express, if you're American Express card holder, the Sky Lounge is what it's called. They go out of their way to cater to your needs. Dealing with Scott, it was funny. He would call us because he disperses the money to the vendor. He wants to make sure, was your equipment delivered as agreed upon? Was there any damage to it? Is it exactly what they ordered? Because he doesn't want to pay the vendor until he makes sure that we're perfectly satisfied. And he's not trying to create any false bone of discontention or try to hustle a deal, but they try to hold back the money to make sure that the vendor isn't taking advantage of us before they release the funds. And what I remember, in fact, it's almost a big joke, because with Scott, I only had to make 1 month's payment, I think first and last month's payment, which is like, for example, like under $3,000. And he wired to my vendor like, 50 grand. It was the stunning. It reminded me when it just, for spending $3,000, I got 50 grand wired to my vendor and another 50,000, once they delivered the equipment. So by Scott being in the middle of not only from the credit underwriting standpoint, because in this situation, and I want to make sure I say this word correctly, Scott actually uses his own liquidity, not on every deal, and some of the deals he farms out. So I think you said you were a hybrid type of lender.
That is correct.
So Scott is part of the lending process. He's able to go to his partners and say, yes, he does have 2 Dairy Queens, but he's not a partner in this third one. He only owns the real estate. Scott is able to, he's the underwriter, but he's also able to, I hate to use the word finesse because it just sounds negatively, but Scott is able to put the pieces together. And I'm sorry, Scott, I didn't mean to overtalk.
Yeah, no problem at all. Yeah, that's correct. We are a hybrid lender. What that means is I have my own warehouse line that I can fund off of, so we can keep deals in-house on our own books. And we do we have 8 banking relationships established with billion-dollar banks. These are large national lenders that we work with. And in some cases, whenever we complete the financing, they will buy the loan from us and they will service the account. So essentially the paper, just like with mortgages and car payments, the lenders will come in and buy it, and then your servicing will change hands. In terms of the question on the screen, real quick, and I'll answer that question. Do you report the loans to business or consumer bureaus? Couple of things. It's important to note what Master Kim was saying. We do have 2 processes on the commercial equipment finance side. Anything under $250,000 are considered application only. Okay, so literally it's a 1-page credit out. The customer can fill it out and apply for up to $250,000 in equipment financing. The minimum amount we accept is $5,000. Okay, so $5,000 to $250,000, 1-page credit out is all you need to apply for financing, as long as you meet the 2-year time in business requirement. Okay. Now, COVID changed the landscape significantly for all lenders, and we could spend a whole hour talking about that. But one of the things that came out of COVID was now, if you request over 100,000, they want to see 3 months of bank statements. Okay, and it's because so many businesses went out during COVID, and lenders took such huge losses that now, when you come to me and say, "Hey, I want to finance," if it's over 100,000, we're going to need your last 3 months worth of business bank statements. So that would be, in this case, May, June, and July. If it's under 100,000, it's literally a one-page credit app to apply for financing. In that particular case, you're going to have typically an answer back in about 24 hours or less. Now, once you exceed 250,000, then you're going to be looking at a financial package to be able to get approved. Now, we can go up. Our maximum lending threshold is 5 million. Okay, so those we can handle those really big projects, like Master Kim was saying, for a Dairy Queen, a hotel, etc. A project where somebody may need $1 million just in equipment, which is very common, especially if they're building a brand new convenience store or hotel. If you exceed 100,000, the term would extend from 5 years to 6, so you can go out to 72 months on the 6-figure deals. And if you exceed 500,000, we can go out to 7 years. 7 years is the max term that would be available, and that's only for the big deals. Most deals go up to 5 years, and some that exceed 100,000, we can go up to 6 years or 72 months. I'm sorry.
I have one question. Are these typically with balloon payments at the end?
No. What we offer are capital equipment leases. Okay. And then there's what's called an operating lease. Okay. A capital equipment lease is essentially 100% financing, where the customer is going to own the equipment outright. Okay. An operating lease, and that's what's done 90% of the time. Okay. Because somebody's financing it and they want to own that equipment outright. Now, there is what's called an operating lease, where you have the ability to turn the equipment back in when the financing is completed. That's typically done on titled vehicles and IT, computers, stuff like that. Technology that 5 years from now, 3 years from now is sort of out of date. Copiers is another one. Huge in the copier game, operating lease, because you're going to pay for 3 years to have that copier. Then you sign another 3-year lease and they bring another one in. To answer a couple of the questions that were on the board, do we report? No, we do not report anything to your personal credit, which is a huge benefit to the business owner. So the business owner is not going to have to worry about that monthly payment that Cap City just approved them for appearing on their FICO credit report, which is going to impact their ability to do all other things they may want: buy a house, buy a car. Now, once the financing has been signed off on, you will have a PayNet score. Okay. Now, a PayNet score is, again, something that only lenders look at, and it's a part of your business credit report. So you don't have to worry when you're going to buy a house, buy a car, etc. Nothing that you're financing through the business is going to touch your personal credit report. But if you are financing through your LLC or corporation, then you will have a PayNet score, which is linked directly to your business credit report that we talked about earlier.
Let me ask you the other question.
Okay.
Does that lack of reporting to the business credit people, do you compensate? Do you have to pay for that with a higher rate?
No. We can talk about the rate in just a second. To answer the question on the screen, are Uber drivers considered business owners? Yes and no. Okay. Anyone is considered a business owner that pays taxes on their income. Okay. Now, most business owners create an LLC or a corporation. It can be a C Corp, S Corp, whatever it may be. But most of your business owners have an LLC or corporation. Those are the two that most people are familiar with. You can be a sole proprietor, where you don't have an LLC or corporation and you simply are a business owner through your Social Security number. So yes, you can be a Uber driver, but you are going to have to report your income. And if you're a sole proprietor, you're also going to have to provide 2 years' time in business. And you have to provide that proof. So for 2 years, you would have to provide tax returns, something from Uber, etc., showing that you've been a driver for a minimum of 2 years. Because again, what we talked about before, everything starts and ends with your time in business. It's easy to verify time in business when you're an LLC because we just pulled the business filing.
Have you ever loaned to Uber drivers before? Out of curiosity.
No, we have not.
Hey, Scott.
Yes.
With respect to the tax laws, and this is a biggie, but oh my God, I just almost forgot. IRS code 179, double bonus depreciation. Could you tell everyone about that? Because that's very important. Because
that's a huge benefit. Yeah. So let's talk about the benefits. Why business owners love this type of financing. We've talked about how quick it is, how easy it is to access capital, 24 to 48 hours. We've also talked about it doesn't report to their personal credit, which is a huge benefit. The next big benefit to the business owner are the tax incentives. Tax incentives now are the best they've ever been. And Master Kim mentioned Section 179. Now, what I'm going to mention to you is what the IRS offers. I'm not a tax consultant, so all I'm doing is highlighting programs that are in effect that the business owner would be able to qualify for, but they have to essentially report this to their accountant or CPA. What Section 179 is it allows any small business owner to write off $500,000 a year in equipment acquisitions. And I'll repeat that, $500,000 a year for equipment acquisitions, and that's for each LLC or corporation. So in Michael's example earlier, you got a guy with 5 convenience stores. Every convenience store is under its own LLC. He gets $500K for each one of those LLCs. Okay. Now, it doesn't have to be big equipment purchases. I tell people all the time, you buy a printer for your back office, save the receipt. You buy anything for your business that's not for resale, you need to be saving those receipts. And at the end of the year, when your taxes are due, you need to turn those receipts in, and you're going to get a dollar for dollar tax credit for each one of those dollars you spend. And I can give you a real world breakdown on that in just a second. Obviously, the stuff we're dealing with, a pizza oven that's $25,000, for example, that's a nice tax credit because you're handing your accountant at the end of the year, hey, I bought this pizza oven for $25,000. That's a significant tax credit. Now, what Section 179 is based on is this. Most small business owners in the U.S. pay a tax rate of 30 to 35%. We're going to use 35% as an example. If someone, for example, took $100,000 and that's what they spent in equipment over an entire year, and they're being taxed at a tax rate of 35,000, a tax rate of 35%, their tax credit is $35,000. That is real, no smoke and mirrors. You turn in $100,000 in invoices to your accountant or CPA, they write every penny of that off. You got $35,000 going towards what you owe Uncle Sam at the end of the year. Okay. So that's the tax deduction on Section 179. And that's applicable whether you finance it or not. So if you pay cash for everything, you still get that benefit. Where we offer enhanced benefits through the financing are every dime of interest they pay to finance the equipment is fully tax deductible. So every penny of interest you make with every monthly payment you make is tax deductible. And we have people every year that'll email us and say, hey, what did I pay this year in interest? We send it to them. They turn that in because that's a tax write-off. And Uncle Sam allows what's called bonus depreciation, which means even though you're writing off 100% of that equipment year one, they still let you depreciate the equipment 25% a year for the next 4 years. So that's why they call it bonus depreciation.
Oh, is that new? That's fairly new, right?
It is. It is. Section 179 has been around for decades. It used to be $25,000 a year. $25,000 a year is what it used to be. Now it's $500,000 a year.
Hey, Scott, if I'm not mistaken.
So you can see, and that happened as a direct result of the great housing recession of 2008. When Michael said you couldn't get SBA financing, there were several things that the federal government did to spur business growth. And one of them was they took Section 179 from 25,000. The first year it was 100,000. Then they took it to 200. Then they took it to 3. And eventually they took it to 500, which is where it has sat for over a decade.
another guest just joined the panel, but we also have a question on the screen from actually our co-host here, HB Twin. He wants to know, why and how did you decide to go into business for yourself after leaving the big banks?
Good question. So I spent 10 years working for a large equipment finance company based out of Houston, Texas. They covered the entire country, had great success there. Was actually the number one sales rep in the company. We had about 150 sales reps nationally. And over that 10 years, I sort of just climbed my way to the top and had a lot of success. With that success came a lot of opportunities. And I was fine. And honestly, I still would be there to this day, because at the time we were owned by private equity. Paul Allen, who was one of the co-founders of Microsoft, his private investment group was one of the first owners of our company, called Vulcan Capital. Then they sold to a much larger private investment group. And so for almost 10 years, we were owned by private equity. So we were not beholden to the banking rules and guidelines. Okay. Then, like a tsunami, all the big banks decided there was a whole lot of money to be made in the equipment finance space, because they didn't do it. It's what we were talking about earlier. You walk into your local bank, hey, I want to finance a pizza oven. They didn't have a product for that. So what did the big banks do? They said, we're going to buy up all these guys. And so in 2020, 2 months before COVID hit in March of 20, we got the news at President's Club, which is the annual awards retreat they took us on, that Regions, the big bank out of Birmingham, Alabama, was buying us. And no one was happy. Out of 100 people in that room, we all left the room shaking our heads, because we knew the good times had just come to an end. Now, we weren't shady and doing anything untoward, but we knew when a bank came in, we were going to be beholden to all these rules and all these regulations and all the crap that goes along with banking, which we had none of that when we were owned by private equity. So when that happened, I stayed for 1 year and gave Regions a shot. And I did not like working for a big corporation. I didn't like it when I was in my 20s and worked for some huge corporations like Citi Bank was one that I worked with. And I just told myself, I don't ever want to do this again. When we were owned by private equity, we had about 400 employees. When Regions bought us, we became one of 20,000 that they had around the country. So as opposed to me making a lateral move and just going to work for one of my competitors, I had enough money saved up from my success, as well as connections made, to where I was able to pivot and start my own company at the end of 2021. So I took a gamble on myself, but it's pretty easy to do, because I've been 100% commission sales rep for close to 25 years. So with big risk comes big reward, and I've played in that sandbox pretty much my whole life. So I'm not risk averse the way a lot of people are. I'm willing to take those leaps, because typically they've always worked out well for me in the past.
You're your own businessman when you're a salesman. That's for sure.
Mm-hmm. Yeah. Well, and especially when you're in the financial world, whether you're a stockbroker, wherever it may be, most of us are commission based. You know, we may get a salary plus commissions. For me, I'm 100% commission, and I've been that way since my 20s. So I've never had the same paycheck twice.
Hi, Scott. Very great to meet you on BlackCityFi. I wanted to ask you, great. I wanted to ask you, how do you deal with lending to veterans?
Yep. There's nothing specific on the commercial credit side for lenders the way there is on the commercial, like on the mortgage side, we had VA as a product that you had to be a veteran to qualify for. On the commercial equipment side, everyone is looked at the same. There's no discrimination for anything. I mean, age, race, sexual orientation, veteran status, you name it. The underwriting guidelines are rigid, and you either qualify or you don't. It's really as simple as that, which is good, because it takes a lot of the nonsense out of it, you know, in terms of who can qualify for financing and who cannot.
Well, that's amazing. And this is, when you're coming through the door, you're asking a guy like you, hey, I need some financing for some equipment I'm trying to purchase for my 7-Eleven, let's say. What are you looking for that person to have? I heard some of the criteria in terms of length of time in business, whether you're an S corp, etc., banking statements. But in terms of score, now you said your personal credit score didn't take a hit. So what are you looking for credit wise if they're going to be trying to get this money from you at any sort of good rate?
Yeah, so obviously the 2-year in business mark is set in stone. Anyone with less than 2 years in business is a startup. And let me just say this really quick, because I get asked this question almost every single day. Why do they not lend to people that are under 2 years in business? I probably get asked that. The number one question I get asked is, what's the interest rate? The number two question I get asked is, why can't I qualify if I have less than 2 years in business? Simple answer for that is this. Out of everyone that starts a business in the U.S., 70% of new businesses fail in the first 2 years. Out of the 70% of businesses that fail in the first 2 years, 90% fail year one. And it's been that way for decades. And no COVIDs or anything else has changed that. So again, banks are not going to discriminate against individuals. They're going to discriminate against trends. And in this particular case, decades of data have shown that anyone with less than 2 years in business is liable to go out of business. And that's why they don't want to lend to them. So that's why that rule is so hard and rigid. As far as qualifications, we like you to have a 640 or higher FICO score. The 2 years in business is obviously a must. We don't like to see bankruptcies unless it's very, very old. And obviously, the higher the FICO score, the better you're going to qualify for in terms of your pricing. And then of course, the last component is what are you looking to finance? I had a guy that literally came to us last week, and he owns several convenience stores, and he said he wanted to finance a limo. And I said, well, Mr. So-and-so, you've got 4 convenience stores. We've done convenience store business for you over the years. Why do you need a limo? And what he was is he was wanting to start, his son was wanting to start a limo business, and he was trying to finance it through his convenience stores because we have done other financing for him. In that particular case, that's not a deal we can do. Because if I submitted that guy who's a convenience store guy and said he wants a limo, the underwriter is going to say, why does a convenience store guy need a limo? So stuff has to make sense too in terms of what someone's requesting. I mean, if you're a pizza shop and you're financing stuff, it needs to be something that a restaurant pizza shop would need. The only 3 industries that we really cannot finance are the gray areas of society. We don't finance porn, we don't finance cannabis, and we don't finance gambling. Those 3 things we just can't touch. And we get asked almost weekly about cannabis cultivation. I know that's a big, big thing that a lot of people are making a whole lot of money in. But unfortunately, on the equipment side, it's still looked at illegally, federally, and so banks and lenders don't want to touch it. Now, there are certain banks that will. But
you said on the equipment side, so like I don't know what they're buying. The lights, stuff like that.
Yeah, a lot of it's hydroponics, lights, and stuff. I mean, look, I know for a fact plenty of banks are financing this stuff. But if the name of your company is Ed's Weed Dispensary, they're going to know what you're doing. Now if it's ABC 123 Inc. and you want to request some, and you want to finance some lighting for a warehouse, that's harder to figure out. So a lot of it is just common sense sort of stuff. Does it scream that this is for marijuana cultivation, for example?
Right. Again, so you have to be a little clever.
Yeah, the underwriters they're not going to sniff out everything, but in some cases, it just can't be too obvious. Like right now, vaping is really big. And if you notice in a lot of strip malls now, there's vape shops everywhere. Well, these vape guys will come to us and want working capital because they'll want, working capital can be used for inventory. We struggle getting those guys approved because of the type of business that is. They kind of operate in that gray area where some of the products they sell, so that's an industry, for example, that's pretty tricky to get done that we see pretty frequently.
Yeah. Hey, Scott, I wanted to mention a couple things that it just, why would businesses use you? And I'm only going to go from my own personal experience. A physical street sign. So in every community, your business sign, that could very well cost 16 grand, just the street sign at the street, not to mention the marquee piece that's on the building, your HVAC unit. If you've got a commercial building, you can't be letting your candy bars melt, or you can't be having a restaurant with adequate working HVAC, heating and air. And that is tremendous. Even if it's a third party lease, a lot of these leases, and that's the beauty of connecting with the John Galt show. You can even run your commercial leases by him, and he can get it to us or Black. And I know a lot of the people on the panel are involved in business. So even Blacks Who Defy, I know that there's a specialty packaging machine that only a guy like Scott would understand, that the local traditional bank, any weird industry specific equipment, they get the willies. But the reason I mentioned about a street sign or the HVAC unit, these are real things that affect the business. Do you want to put, how long can you have a banner hanging up on your store fascia before the coming soon banner falls down? You need to, and to get a channel letter sign, with zoning approval, that could cost every bit of 13 grand for a custom channel letter sign. So, I'm using the signage, I'm using HVAC as just an example. So it doesn't even have to be these sophisticated business needs. And then Scott, if you could talk a little bit more about operational cash flow, because my wife and I have never touched that with you. It's always been equipment related. We're probably too stupid to understand that you had an operational cash flow opportunity.
Yeah, I mean, most small business owners, look, if you've got to put an HVAC system on your building, for example, and that's going to run you $50,000, would you rather finance it and have a $800-900 a month payment, whatever it ends up being, or would you rather stroke a check for $50,000? Well, most people are going to pick the latter if they can qualify. And so, better to have your money in your pocket, even though you're going to pay some interest over it. Keep in mind, you get to deduct that interest, you get to depreciate the equipment, and you get to write it off. So those are things that we highlight. So that's one of the big reasons that so many people are financing as opposed to writing that big check. And obviously that's how we stay, nice and busy. Now, the working capital component is, again, it's a short-term credit product. It acts as like a line of credit for the business. So the number one thing we get asked, can we finance, is inventory. So whether you have a nail salon, a convenience store, whatever it may be, we don't finance equipment that's for resale. So what we do offer is the working capital product. And unlike equipment financing, where we're going to pay the money directly to the vendor that you're buying that pizza oven from, with working capital, that money is sent directly in the customer's account. It is 100% driven off their bank statements, and the only underwriting requirement for that product, they have to be in business 1 year. So instead of the 2-year requirement for equipment financing, working capital is 1 year in business, and they have to have 3 months worth of business bank statements. Now, you can't have overdrafts, NSFs, whatnot on your bank statements. That they're going to immediately decline the deal. But based on those bank statements, the lenders that we work with have these sophisticated algorithms. They plug the banks in, the bank gives them the information, and they'll come back and say, this is what we're going to approve you for. We see customers all the time that just say, hey, I want $20,000 because I want to repave my parking lot. They submit the bank statements and they get approved for $150,000. Now, the good news is that 150 acts like a line of credit. So if you only want 20, no problem. We'll execute on 20, set you up for a monthly payment, wire that money in your account. But that other 130 is sitting there that you may be able to tap into at a later date. So
that's amazing.
Yeah, the difference with working capital is it's a much shorter term credit product. Maximum term is 24 months. And on the smaller deals, they're going to pretty much keep you at around 12 months. So, it's not going to have the longer terms like you would see with the equipment financing. And also the interest rate is going to be higher because it is the most high risk product we offer. Because think about it, you're sending a guy $50,000. It's not tied to any sort of collateral that he has. And so the risk of default on that product is higher. Therefore, the rate is going to reflect that. Now, with working capital, they will.
What is the premium in the rate between the difference in rate between the working capital versus the?
Yeah, good question, John. So right now, everyone has heard the prime rate and everyone has heard the Fed. Okay. The Fed is who sets the prime lending index, and the prime rate or the prime lending index is what all short-term lending is based off of. Okay. Anything under 10 years is what those are going to be based off of. And so right now the prime rate is at 8.5%. It's been at 8.5% for over a year. Now, to put things into context, the prime rate before COVID was under 3%. And we had a prime rate under COVID. We had a prime rate under 3% for almost a decade. That's why you saw record low rates across the board. Also, the LIBOR and some of the other products that mortgages and more long-term financing, those were also at record lows. Now, unfortunately, you're looking at much higher. You're looking at a much higher rate of return as far as rates go. I'm sorry. So the prime rate right now is at 8.5%. The strongest, most AAA, A+ credits you'll find in the market today, any bank, any credit union is going to be at 8.5%, and then the rate builds off that. So, for example, we may give you 8.5% if you're an A+ type borrower, but in some cases you may get prime plus a half, which is 9%. You may get prime plus 1, which is 9.5. You could get prime plus 2, which is 10.5. So everything at that point is going to be based on your FICO score and, the other factors that we looked at. What type of equipment is it? Michael made a good point about signage. There's essential equipment and there's non-essential equipment. Okay. Essential equipment is an HVAC system. If you're running a store, you want to be able to offer heat and air. Non-essential piece of equipment is like a slushy machine or something that the business doesn't necessarily have to have that's going to impact whether they stay open or not.
Yeah. Hey, Scott, why don't you go ahead and mute and whatnot, and I'm going to talk to the.
Yeah, I'm going to go ahead and mute real quick.
Okay. So,
right.
One thing, John, that I think that Scott will come back and discuss eloquently, because I did a horrible attempt at it, was explain how businesses use a line of credit. Not really small businesses, but let's say the guy that owns one Dairy Queen, but now he owns 3 Dairy Queens, or he owns, 2 Red Roof Inns. And if you add up all the labor between the 2 Red Roof Inns, he can't miss payroll, right? And they draw on a line of credit. So, Scott, you mentioned something very important. It's unfortunately one of the realities of business that separate a smooth running business. When you're hiring grown-ass people, especially Americans, you can't mess with their pay. And, this is where Roger and I, my business partner, we had a line of credit with our lender because when we bought gas, we couldn't wait till our invoices came in to pay our gas bill. We had to draw on that line of credit. So when you see these businesses that aren't necessarily small, maybe they're the next step up. And I know and I'm using Dairy Queen as just a proxy example. Someone that owns 3 to 5 Dairy Queens, they can't take the daily proceeds from the previous night. Because keep in mind, a lot of it's credit card batches. They can't take the cash flow from the previous day to pay their labor on Friday. So they draw on a line of credit. So, Scott, are you in a position to talk briefly about, not necessarily the instrument that you folks offer, but just the line of credit? I tried to explain that on a podcast, but I did a miserable job explaining, that that's why payroll isn't balancing. That's why they're able to buy equipment on the spot. But it's a devil too, because it can ruin a company, because every year they have to pay that line of credit down to 0, or in the case that you mentioned, 24 months. Do you have time to talk briefly about that?
Yeah, typically, Michael, the product you're talking about is a secured product. And what I mean is in the lending world, in the commercial lending world, you have secured financing and unsecured financing. Secured financing means they're putting a lien on your building, your property, etc. It means there's skin in the game. Okay. Unsecured financing is what we offer. Technically there's equipment involved, but again, it's a depreciating asset. So you don't have a piece of real estate involved where the bank knows if the business goes belly up, they're going to be made whole because, they've got a, nice commercial property that they can lean on and sell. With a line of credit, it's going to be typically real estate backed, or in some cases, the bank statements, they have to have large deposits or a large portfolio to get approved. But in most cases, it's real estate backed, because again, you're going to qualify for a much lower rate in a much longer term. You may be able to get a line of credit for 10 years, as opposed to a working capital product like we talked about earlier, which you may be at 2 years on something like that. Because again, that product is unsecured. That's why the rate is higher. But conversely, you're talking about having the money in your account 24 hours later, where the product Michael's talking about at a line of credit is more of a traditional banking product, where you're going to have a commercial. Well, they may not send an appraiser out, but you're going to have a desktop commercial appraisal where, essentially they're going to try to figure out what the value of that property is. And you may have a first mortgage on that property with a completely different bank. And then they would essentially come in as what would be considered, kind of like a second lien position, or a second mortgage would essentially be that line of credit. So much more involved product to get set up and approved for. But a lot of large businesses have that. And that's why companies like me, we deal with the smaller to more mid-size business owner. The large guys have these bank lines in place. And it's, in some cases, the companies have been around for decades, even, 100 plus years. So what they have established with their local banking partners is something that we just can't compete against. So that's why your smaller to mid-sized business owner is going to work with someone like me. But keep in mind, the vast majority of business owners in the country are not the big companies. They're the small to mid-sized business owner. So that's why we do so much of that business.
Yep, excellent. And then, Scott, there was one thing that I wanted to share with John. And John, we spoke about that gentleman up in the Michigan market that I confided in, who knows Scott as well. And I've known Scott for 12 years. And for some reason, although Scott says he's national, I'm just used to him being down here at the South. And so I called my boy Thamer Dabish up in Michigan just to I wanted to pick his brain about other sources of funding. And I called him, and this guy owns 2 Red Roof Inns and like 4 Comfort Inn and Suites, or whatever that chain is. And please forgive me, I'm murdering the name. And he told me, "Oh, you got to see Scott." And I'm like, "Scott Linton?" He's like, "Yeah." I go, "That's my boy." And he goes, "No." He goes, "I've been doing business with Scott for over 6 years." I was stunned, and I almost felt like hey, but I stupid me. Of course, Scott's doing business nationally and doing a lot of business with people with every business that they grow. And I just never thought about when a hotel has to remodel and buy, when they buy 100 mattresses, they're not going to drain their cash flow to do it. It's called furnitures and fixtures and equipment. So they use Scott as well. But I was stunned. My boy Thamer uses him. And John, we spoke about this on an earlier podcast. I was calling him for some advice, other alternatives. And he too, up in Michigan, for his whole completely different industry, uses Scott for all of his hotels and whatnot. But it makes sense.
It's very valuable as a bridge. It almost seems to me like bridge financing, where you kind of sit between the banks. When once a business gets up a certain size, the banks are more willing to do business with them because you're dealing with much larger numbers. But getting started out, 2 years and beyond, mid-range businesses, you're squarely kind of in the zone for them.
Yeah, and and not to get me wrong, I mean we do financing for these very large companies too. I mean there's a reason that very large companies would want to work with us, whether it's a capital equipment lease or an operating lease. So it's not to say that we don't deal with these large companies that may have existing banking relationships in place. We absolutely do, but it's just hard to compete with someone who may have a line of credit that they locked in at a really, really low competitive rate.
So I've noticed that they use Scott because they don't want to use their local bank. And Scott also, I was stunned to see that a large, very big fuel suppliers do use you. I was stunned, obviously, because of the tax advantage for one, but two, it doesn't interfere with their commercial lending relationship as they're buying all the equipment. But I think when the big boys use you, I think they're using you because of the huge tax advantage of the double bonus depreciation. And I know
Well,
it's not
and
called double bonus anymore.
we can finance equipment for their dealer sites too. They go to a local bank and the bank says, we're going to give you the financing to use at sites that you own, operate, and control. One of the unique things, and we did that with you and Roger, is we can actually finance for the wholesale petroleum companies for their dealers. And all they have that links them together is that long-term fuel supply contract. So that's a unique thing that we offer that traditional banks don't. And that's how we're able to work with some of these larger wholesalers around the country.
Yeah, and one more thing, Scott, and you may not know this or just refresh your memory. So I told the podcast when Roger and we sued someone and they did a countersuit and we lost, and that put us in a pickle with Citgo, Sunoco, everyone because of our lines of credit. Scott never bothered us one time because a lot of times your current lender, and we paid off the lawsuit, by the way. Scott never got involved one time, but keep in mind, your current lender will ask you for updated financials, especially if they're carrying the paper on whether it be a commercial mortgage or whatnot. Scott never a day in his life, and again, Scott, this happened years ago, and you probably don't remember. Scott never in a day bothered us, or in fact, he still funded us while we were currently involved in a lawsuit, and we lost the lawsuit. So that was great. And not that I need to bring up negative stuff. The point I'm trying to mention, Scott minds his own business. That's why they don't ask for, under a certain threshold financial. If it were me and my money, I want to see 3 years tax returns. I want to see it all. Even for 20,000, I want to see it all. Right. So it's amazing what Scott historically has been able to do on a one-page credit app and the timing. And again, Scott's seasoned enough that you got to be a legit business. He is going to go to your Facebook page. He is going to go to the state, Secretary of State's website to make sure it's legit. But also keep in mind, it isn't only Scott. All of those weird websites that you see about people trying to fund commercial businesses, they're being inundated with Nigerian scams and everything. So fraud is taking place here in the United States like mad crazy. And Scott is obviously one of them as well, trying to discern genuine businesses and whatnot. So,
yeah, speaking of that, Master Kim, that first story you led off with, Scott, sound like that guy wasn't on the up and up. I don't know if you looked into it any further after the deal fell through, but it just seemed like he wanted to do business with someone that maybe wasn't credible or something, maybe a business that he owns, something like that. That was just my first thought in you telling me the story. I want to ask you a couple of inside baseball questions about how you got the funding to go out on your own. Would you say that was from being kind of, the lead salesman at your first job, and then lenders were willing to come along and kind of more or less fund this venture, the Cap City?
A combination of both. I've always been money minded, and I've always done a real good job of making good investments, saving my money, and then obviously I was in a very lucrative position as well. So that's helpful when you have that nest egg to lean on, because with anything, it takes money to make money. And I was fortunate in some of the successes that I had previously to have that sort of money to build upon, but also I had deep relationships with people that were willing to open doors for me, and quite frankly, go to bat for me, to put me in the position that I was in. And then once you start doing good business and showing that you're going to continue, the track record of success that you had when you weren't a business owner, then more opportunities come your way. So initially, I only had 3 or 4 banking relationships. And as we continue to have success and grew, that's now up to about 10. So, with that success comes the opportunity to work with additional lenders who are willing to, work with you because they see you're doing a good job in the space.
Right now, what would you say is your biggest constraint? Finding new lenders or finding new people to borrow money, credible people to borrow money?
Probably both. I don't think one is any more or worse than the other. Right now it's a little bit tricky coming out of COVID. We're talking about 20-year highs on interest rates. People got spoiled. The 2010s, you were talking about record low rates across the board on everything. And now with the inflation and stuff that we're dealing with, you're looking at a completely different landscape coming out of COVID. So it's a little tougher, than it was, and people are paying more to get the items that they were accustomed to, whether that's financing or whether that's going and buying a gallon of milk from the grocery store. So it's affecting everyone. We're not in a recession. The numbers show we're not in a recession, but we're also not in really a growing, robust economy either, regardless of what some of the numbers say, because inflation is real and it affects everyone in terms of what we're paying, just every time you put gas in the car or put, food in your mouth. And so those sort of things have a real world effect on, what people are willing to do. And a lot of people, quite frankly, right now are sitting back waiting because they think rates may come down. I don't think rates are going to drop or come down significant for a while. You could be looking at years just based on what we've seen, because again, everything is cyclical. We rode a decade low. I mean, we rode an entire decade of the 2010s with just crazy low rates. Well, guess what? We could be riding an entire decade of the 2020s where rates are up, and that's just the reality of what we're looking at.
The first house I bought, my mortgage rate was 10%. So
yeah, and then they had rates as low as in the threes. I mean, it's crazy. Now rates are back up, around like 7%. So, and that knocked a lot of people out on the mortgage side of things.
Guys, any other questions that we have Scott here? We've had him here for an hour and a half, so we shouldn't take up too much more of his time. Any more questions? Anyone want to jump
Scott,
on?
if you don't mind, this is maybe more of a personal question. So, I had gone out to dinner with Scott and his lovely family about a month and a half ago, and Scott is doing a new construction home build right now. And like he says, we're not in a recession, but like you mentioned, inflation. So do you have a moment to just briefly tell everyone how you secured the vacant land, the construction loan, everything, and what you had to deal with getting a mortgage on your property, but you couldn't show up empty-handed. You had to put some real liquid on the line as well. If you could talk about that briefly.
I'm gonna be very polite in saying this. Had hindsight is 2020. If I knew now what I knew last October when I bought a piece of raw land and eventually worked all the way up to this point where now I'm building a house on it, had I known now what I know then, I never would have done this. Okay. So I would just say this without going too deep into detail. For anyone that's thinking about buying raw land and building a house on it, talk to me, because I'll educate you on why it's not necessarily it's not a bad decision, but it comes with a lot that I was not expecting. And I try to be the kind of person to do my due diligence on things. And unfortunately, I just did not research this as much as I should. But to Michael's point, yes, I've been renting ever since I got divorced. I got divorced at the end of 19. It bled into COVID. But basically, I've been renting for the last 5 years, and I felt like it was time to do something. And here in Metro Atlanta, where I live, all of a sudden overnight, houses just doubled. And I was like, this house used to be $150,000. Now it's $300,000. It was just crazy. And I know that happened around the entire country. And me being old school, I just couldn't pay $300,000 for a house that I knew a few years ago was $150,000. So to me, that's what kind of led me into buying land and picking out a house to build upon. And that's what I did. I found 2 acres of land, prime location. I was able to buy it. I paid for the land out of pocket. And then once I owned the land, I was able to use the real estate that I owned to essentially use it as collateral to get approved for a construction loan, which is what I'm dealing with now as they're building my house. And then eventually they're telling me probably early next year that the house will be done. Once the house is completed, then we'll go from a construction loan, which is what I'm at now, into a, permanent, 10, 20, 30 year fixed rate mortgage. But I've got an 825 FICO score. That's what my personal credit score is. And I'm paying a 10% rate on my interest only construction loan. And I tell people that every day. Every day people complain about the rates they're paying. And I point out that on my home that I'm building right now, I'm paying 10% and I have an 825 FICO. So It is what it is. Nobody's trying to stick it to you because you're getting a higher rate. It's just a direct result of where the market happens to be.
And compared to like a 30-year ARM, they're at 6.5 right now, or what?
Yeah, I mean, long-term lending is different than short-term lending, which is what we offer on the commercial side. Long-term lending is based on different indexes. But yeah, I mean, right now your 30-year fixed rate mortgage is 6.5 to 7%, and it's been that for quite some time.
God, I'm not sure if this is a question you want to answer. That is it essentially a rent tone similar to like Renter Center. I'm not sure if he's talking about the equipment leases or similar to that.
Yeah, no, that we're nothing like that. I mean, what we offer, the vast majority of people that finance with us are financing to own the equipment. There is operating leases, like I said, for copiers and technology, where somebody will come in and they'll make a monthly payment for, say, 3 years to have this brand new copier sitting there. Well, after 3 years, that copier is kind of worn out. They'll sign a new 3-year lease, and that company will bring in a new copier. So that's an operating lease. That's something where businesses can have access to new equipment, as opposed to financing that copier for maybe 5 years, and at the end of 5 years, it's really worn out, and they own it, and then it's essentially a boat anchor. What are you going to do with it? Then you got to turn around and start the process all over again. So an operating lease is helpful when you're going to be turning equipment over, every 2-3 years, which is typically title vehicles and technology. But for everything else, it's typically 100% financed, and where you plan on owning the equipment outright. So it wouldn't be any kind of rent to own where you would turn it in. Most of the stuff we're doing is they plan on financing it to keep it.
Yeah. Hey, Scott and John, I wanted to mention one more comment, that a lot of small business owners, not only are they trying to make money on the front end, but on the back end, avoid tax liability. So even when they buy equipment, they're factoring that in. So they're buying equipment to help boost business and remodel or whatnot, but the tax advantage is severe. And I wish Scott wasn't on this call, because if you weren't, we call it white boy math. When you're able to make money on the front end and on the back end do the depreciation or whatnot, it's like what people aspire to be in that situation. So, and I hate to say what the white boy math, but it's what I and my colleagues kind of joke around. It's to be in that position where, so for example, going to someone and saying, hey, double bonus depreciation, but yet they're at the flea market selling fake Nikes, that accounting doesn't apply to them, but they aspire to be in the situation where they are able to come to Scott and other lenders to borrow on the front end and take advantage of the tax to shield themselves and lessen their tax liability. And this was relatively new to me as well. When I grew up with my mother owning a small little convenience store up in Michigan, we were too busy with the daily grind, trying to prevent employees from quitting on us and stuff like that. We gave zero thought about our write-offs. But as we got bigger and older, then we realized, there's this whole segment of financial accounting or whatnot. Maybe we just didn't have the best CPAs or whatnot, or we were just probably too stupid, even if we did have great CPAs. So everything that Scott's talking about, it's not just making to grow the business on the front end, but on the back end as well. And that's where I get that acronym of or whatnot. But that's also important, and to realize.
We spend a lot of time educating customers that we talk about too. Not that I'm, some whiz or anything like that, but we're here to answer questions and walk customers through, the process. In some cases, people have done this before. They're familiar with how equipment financing and commercial lending works. In other cases, we're here to educate and walk them through things. You'd be surprised how many people have been business owners for years and years and are not aware of Section 179 and the enhanced tax benefits that they would be eligible for. We highlight that on every deal that we do because it's a real legitimate tax savings that the business owner can qualify for.
Yep, good deal. And then Scott, when we went out to dinner, so Scott is strictly business. He won't talk politics, religion, but don't be talking about SEC football unless you're prepared to carry an intelligent discussion about Alabama,
Roll Tide,
PGA or whatnot.
That's right. Roll Tide.
So,
Got out with the Alabama NBA.
There you go.
Oh, and John's originally from
Alabama,
East Alabama. John, tell Scott what city, near Irondale, or tell what city you grew
No,
up in.
originally Calhoun County.
Yeah,
right off of
I'm familiar with that.
very familiar. Yeah, if you've been to
Yep.
Tuscaloosa, we're right off I-20 there.
Yep. Near Anniston.
Yeah, it's my hometown there, Anniston, Alabama.
Yeah. Anniston and Oxford. Very familiar with it.
Yeah. Used to be a military town back in the day, but not so much anymore. The military moved away. Yeah.
Oh, is Fort McClellan not there any longer?
I don't think so. I don't.
The
I'm
big
pretty
army
sure.
base is between Anniston and Gadsden. Used to be a huge army base over there.
Yeah, the chemical base. I think they moved it to Fort Leonard Wood or consolidated it with Fort Leonard Wood. Yeah, if I'm not mistaken. Yeah, the chemical division at least. Yeah. Well, Scott, it has been a pleasure. I mean,
I would love to do this again. I'm happy to to join this discussion again. I know obviously there's questions that folks have. Feel free to share any of my contact info, my website. All of our info is there. Again, if any of your listening audience has questions, feel free to reach out to us. And if you'd like to have me on again to discuss financing, more than happy to join the discussion. This was fun.
Well, Scott, you mentioned something that I think would be good for you to come back on and talk about while it's fresh on your mind, and that is the raw land you just purchased. I always hear people talk about buying raw land. I've never done it myself.
Yeah, it's been a journey, I tell you. Like I said, if I knew now what I knew in October of last year when I found that land and bought it, and I bought it with the intention of building a house. If I knew now what I knew then, I wouldn't have done it. Now, that's not to poo-poo anyone wanting to do that, but I'm a firm believer in you really should educate yourself before taking a big leap. And I completely did not do that. I thought I knew, but I didn't. I didn't know as much as I thought I knew when I got into this process. And it's been more annoying than anything else because I'm an instant gratification kind of guy. I'm in sales. I like things getting done, and I don't like things dragging on for months and months and months. And that's probably the biggest hurdle that I had to overcome with that was just how slow and arduous the whole process is. I mean, literally, I bought my land in October of last year, and I probably won't move into my house until April of next year. So you're talking almost 2 years. So yeah, had I had it do all over again, I wouldn't have. But I'm happy to come back on and talk about it.
Yeah. I think for the people that think of buying raw land and developing it, there are a lot of zoning and all kind of things that
I can spend some time talking about it. That's for sure.
And all of that usually comes with a legal bill, I would imagine, right? You have to have a lawyer for some of those things. Yeah.
No, not necessarily. I never had any need for an attorney in it. It's more so just educating. It's just understanding what you're getting yourself into, and most importantly, what's involved. Because had someone said to me what I was about to embark upon, I would have been like, no way, I got no interest in that. But I didn't know that, and now I'm deep down the road, so I got no choice but to deal with it.
I tell you, we're gonna have to bring you back to talk about this land thing because the questions will start coming in once we get started.
Yeah. Like I said, if you want to have me back on it to discuss that, literally, I bought raw land. It was literally woods. It is all it had ever been from time and eternity was woods. And when it's done, it'll be a house that I'll live in. So it's going to be quite the process. And I'm sure once I move in it, it won't be as much of a pain in my rear end as it has been. But throughout this process of what I'm going through now, it's been a challenge, that's for sure.
Like with the raw land talk, we're probably going to get people jumping on. So yeah, but
like I said, I can't. I got to jump off because I got a prior engagement this evening. But if you want to have me back on it, I'm fine with coming on and discussing me building a custom home.
I just wanted to say thank you for the wealth of knowledge. It's been great to hear you speak, and I look forward to hearing from you again.
Yeah, this was fun, guys. I'd love to come back on and talk more. Sorry I can't stay any longer tonight. I've got a prior engagement I've got to get to. But when it comes to finance, or building a custom home, I've got some information I'm happy to share.
Yep, and then Scott's going to put John's going to put the link up, or Portia put the link up of their website and whatnot. But it's CAPCITYFinance.com. Scott, just one last question: how old are you? Because you're a very young guy. Just refresh my memory how old you are.
I just turned 49 in June, so I turned the big
shit,
50 next June. I
I
turned 50 in next June.
I thought you were like young, late 30s. I'm like, shit.
Yeah, no, when we met, I was in my 30s, but not any longer.
So that's right. Well,
Yeah,
okay,
30s.
thank you very much, Scott.
Yep.
Hey, Scott.
Sorry, I've got a French bulldog here, and he's barking at my neighbor. So
he's ready for you to go. Hey, Scott, feel free to jump on the panel anytime. In the morning.
Well, like I said, thank you guys again. Go to my website if you want to get in touch with me directly. Happy to talk.
Yep, thank you, Scott.
Thank you, guys.
Thank you. Oh, Master Kim, you came through again. You came through.
Oh, no, Scott, one thing I wanted to mention, and not that it means something, but it does mean something. Traditional Southern guy, didn't fall into wealth. No one willed him 10 acres, and he took it to the bank, and he just was a salesman and just clicked up with the right people, and that's where he is today. So there wasn't a like how the small hats are doing it with, Uncle Benny's hooking you up with, here's 80 grand to start. No, nothing like that. And I'm not trying to put words in his mouth, but very humble beginning. But, someone going to these SEC schools, is that really a humble beginning? I mean, you're rubbing elbows with elitists, top level Southerners as well. If you go to UGA or Alabama, you're in tight with some strong people, So, but nevertheless, it was good, man, and whatnot, and excellent questions.
I think he touched on a lot of topics that we talk here. You can see that the raw land comments were coming in, and I'm sure that if he would have come back and discussed his experience doing it, it may, educate some people and discourage other people from doing it, which is always a good thing. You find out, it's not the right path, or you go to another direction.
That's a huge topic right now, John, because of the values are so high, because everyone's hearing you can just go build, right, and not have to pay this inflated value. So I saw an acre where I live that I'm telling my wife it's a nice subdivision for 50 grand. We could buy it tomorrow. So I want to hear what Scott has to say. It's just very uncanny timing. And just like you're mentioning, John, this is a hot topic because you're hearing the same stuff. Why buy one of these bloated?
It's so funny you say that. It's so funny you say that because there's an acre. So my wife just sent me some land, brochures on some plots of land near where we stay, and they have acre and 2 acre lots, and you can build custom. And we've been looking into doing that. I'm probably going to sell my home in the next year or two and start building a new home. And it's great. You can use one of their builders, or you can bring in a custom builder. But the land is, like you said, around 50,000. And man, it's amazing how things coalesce, because I was just looking at it before I got on here.
Yeah, a lot of people are interested in that. I would like to bring Scott back. He probably could come back a couple times just talking about that, because again, he hasn't moved in yet, and I imagine that he'll still have a bit of a process to go through before he moves in. And again, for the people that are interested in that, this would be interesting to hear the backside before you commit yourself.
Hey, John,
I'm interested in the.
Go ahead, Master Kim.
Oh, I'm sorry, sir.
Go ahead.
Oh, yeah. So also, kind of a joke, but he's an eligible bachelor just like you, John. So, if the lucky woman gets a hold of him in time, she'll be able to pick out the drapes.
You have to get in line with me, Master Kim. You got to get in line.
I'm interested in if he has any knowledge regarding whether. I'm interested in knowing if he has knowledge regarding whether the land is undeveloped or not, and what the process is for that. I was looking at some undeveloped land just east of Del Rio, and I was also looking at some undeveloped land in central Wyoming. And I mean, when I say undeveloped, we're talking about roughly 100 acres, and they're selling it for anywhere from $70,000 to $100,000 right now. My cousin had given me a tip on.
I figured that would be a very interesting topic. We definitely have to bring him back, and maybe some other people that going through the same experience. Have a back and forth. And what's someone says Wyoming is intense. Momo, of course, he's up in those areas. But yeah, I think it's a topic worth covering going forward for sure. Momo.
Yeah, I don't know about Wyoming.
Hey,
Wyoming.
Was it Kanye West that bought property? Was it in Wyoming?
Yeah, well, yeah, he's a billionaire effectively, and he can weather the storm. You know, Wyoming is beautiful during the spring months and the summer months, but it has some harsh winters up there, and for good reason. There's only one portion of the state that's truly occupied, and all the rest of the state is still effectively wilderness. So,
Right.
I mean, yeah.
I've never been there before. Never been there.
Well, I look
Same
at
thing
that.
with the Dakota.
I look at
Same
that,
thing with the Dakotas.
but also again, like I mentioned, east of Del Rio. That's where I'm mainly looking, because east of Del Rio, I mean, shoot, it's literally right there. It's about 45 minutes from when the time zone changes, and it's not that far from. I mean, I'm only an hour and a half. It's only an hour and a half from Eagle Pass, where this particular undeveloped land is at. Also, and it's around the same price, about 90 acres for $70,000. But the thing is it's undeveloped. But I like
90 acres of undeveloped land. That's a feat. You know, what do you
Yes.
plan on doing with it, or what were you thinking about doing on it? Building your own fiefdom?
No, just getting the heck away from society. Basically, it would be my burn hole in the event that society collapses. It's my escape hatch. That's
Nothing wrong with that. Nothing wrong with that. It's just not. A lot of people don't realize how vast a 90-acre plot is, especially if it's undeveloped. Like, nobody has come out there to do anything to it. It is a feat, man. Sinkholes everywhere, overgrown thickets and patchworks of bushes and all types of plant and wildlife. Man, that's a huge swath of land. A lot of people have never seen 90 acres.
Well, the wildlife is the other thing for it, because my cousin, when she and her husband tipped me off on this land being for sale, well, patches of land being for sale in that area, they purchased their patch. I think they purchased 50 acres, but their plan with it was to use the land that they bought for hunting, because they're both avid hunters.
Hey, that makes sense. And then they can even sell passes to hunt on their land. I know some people who do that, and it's worth it. It'll be a moneymaker for them.
Hey guys, shameless plug here. I think we brought you guys, well, Master Kim, really, I should give Master Kim some credit here. He's brought us Ken Watson, Scott Linton. We've also had some other people, with the Chicago Hustler Master. We've had Philippe. We've had the architect down in Georgia, Chris. We've had some pretty good businessmen giving us some very good insight from a lot of different perspectives. Of course, get Crack as well. So, guys, share, subscribe, like, and of course, show some support for the channel. You see the host at the bottom, HB2N, my co-host there, me, John Galt, and our wonderful editor, Portia. You guys don't know how much work Portia put into putting this show together. We had to do a lot of scheduling, things like that on the back end. And, she's working, everyone else has responsibilities, but we all keep coming together to put it together. It's our passion here. Anyway, continue on, guys. Anyone want to come up, join the show? Feel free. I'll put the link in the panel here.
I think Scott's story is so amazing, because here he is. He truly is the definition of a pull yourself up by your bootstraps kind of guy. And he fell into this business. I don't exactly know how. I wasn't there if he told that story, but he fell into this business. He made it his own pretty much. When he had opportunity to work for corporate, he turned it down cold flat, because it of course, anytime you deal with a giant or a big corporation, something that has more than 999 employees, it all becomes bureaucratic, and all the red tape, whether it's a bank or no. And for him to see the writing on the wall and be like, hey, that's not for me, that's amazing. And having the courage to do something about it, that's amazing. It paid off for him.
One of the first clips I played when I first started this stream was from The Strangest Secret. And in The Strangest Secret, he talked about the value of a salesman. You can almost go anywhere. And Scott mentioned how he was the top salesman out of 400. And if you're the top salesman out of 400, people are going to recognize that. And so it's not surprising that it was very easy for him to start a company, because if you can sell, you'll always be able to make a living. That's for sure. A good salesman will always be able to make a living.
That's a
And
fact.
I think he's a good example of that, in that companies were willing to get behind him with their money, because he's been able to sell their money in the past with some success. And so I think for the people that look down on salesmen, man, the sky's the limit for a salesman.
Well, I think we've all said that everything is sales, even with these baseball teams that I run, which is currently my current brainchild and passion. I have to sell every day. I have to sell every day to these parents. For instance, I was talking to Master Kim out offline about some of the manufacturing I have to always get done. I just got 50 units of baseball gloves made. Cost me about 500 and some odd dollars, about 540 to get them made in Pakistan. But quality control is important. So, I don't skip on quality control. I'd like to save $1, but I'll spend that dollar if it's quality. So then we get the gloves, and now it's on me to sell them to the parents. Just for transparency, I don't mind telling you what I paid for per each glove. I paid around $7 per each pair, and I'm selling each pair for $60. Now I could have fleeced the parents and started selling each pair for easily $120. That's the quality of these gloves, because there's a glove called Bruce Bolts. Bruce Bolts started by a little white boy. He ended up getting a contract with the MLB. MLB players started wearing his gloves, and now, what's the importance of that? Now all the little everybody wants his gloves, and now he sells other apparel. But he started. His father really is the one who helped him get it done. But they did the same thing I did. It's a one-trick pony. They go to either get it made in China or Pakistan. So, yeah, man, it's all sales, because I have to now recoup my expenditure and get them to want to buy these gloves. Yeah.
Blacks, it's absolutely amazing you said that you pay 7.6 and sell it for 60. It's amazing, and I don't think people realize that. So when I worked for Kohl's back in my younger years, when I still had a strong back, the back's pretty weak now, but back when I had a strong back, we used to unload the trailers, and I was able to look into it, and it's weird, right? Because they'll sell you a shirt for $28, $29, $30, $40, $50, and when you look at how much they paid per shirt, it's like $2, $3 a shirt, and it's like, wow.
Yeah.
Like, and here's the thing: you think you're getting a deal when you buy it on sale, you're still getting fleeced. Like,
sure.
Like you're still getting fleeced. I mean, like just the amount of money, right? That like they would pay for a trailer. I mean, let's say they paid $30,000 for a trailer. The net that they would net on that trailer is amazing.
Yep. I know a guy who's doing similar. He's buying EV excavating equipment from China and selling it, trying to be a wholesaler for that equipment for guys. And I mean, the stuff that he has is amazing, man. Only reason why I know these kind of guys is because, my days with Home Depot, when I had a strong back, and I was working and I was, working on maintaining these pieces of equipment and having to, wheel and deal and talk to people. And yeah, man, you're absolutely right. The expenditure of the wholesaler is nothing in comparison to what he's going to charge you retail.
Yes,
That is true
absolutely.
because actually you worked at the Home Depot. You remember back in 2006, 2007 when the Home Depot started selling the iRobot, that vacuum
Yes.
that moves all across the room or whatever the heck by itself. And they were selling it at the Home Depot at that time for $199. Well, basically $200. And I remember going through the SNCC system. I forget what they call it now, but it was like that desk thing where you print out the SKUs. And I saw the at
Yes.
cost, and I hit the floor. Like, wait a minute, you're selling this thing for $200 and you only bought it for $69? Really?
Yep. Yep.
Yeah,
You bought
yeah,
it for
bro.
69. Yeah.
You sold it for $199.
Yo,
Yep.
it's amazing, and people don't realize it. I also wanted to talk about buying the raw land. I don't think people realize that if you like to buy the raw land and build your house, yes, it does take a little more work, but you get your house the way you want it, the way you would like the house, and you cut out the middleman in a way, because when you buy an already built house, you have to pay the person who paid everyone else to build that house. When you
That's a
go
fact.
raw land, you're just paying the people to build the house. And so in a way, you come out a little cheaper. I'm not saying it's immensely cheaper. I'm just saying you come out a little cheaper and you actually get the house the way you want. When you go look at a house and buy a ready-made house, you're buying a house the way someone else wanted it. But when you build it yourself, you get the house the way you want.
That's a fact.
And to me, that's very valuable.
Well, it is. We've been bred now, you know, through this American psyop to have an aversion to owning. Don't own. It's a lot of work. I'll never forget the segment I watched. The woman said she didn't want to own. I think I was watching Anthony Bryan Logan. He had a segment he was going over, and the lady decided that she didn't want to get the I'm sorry. She was upset at the amount of money she had to pay for her home after living in it for 2 years. How the prices went up concerning the insurance, the taxes, etc., almost doubling. And she says it's not for me. And I don't know how much money she makes, but she says she made a pretty penny, more than some two income households make, whatever that means. She wouldn't disclose, but she was single, making this money, having to pay this expenditure for this home. She didn't realize what she was getting into, like an idiot, and now she's paying the consequences. And now she's saying she's not an owner; she's a renter. She'd rather rent.
They had somebody like that on Coach Greg Adams, and when I saw that, I died laughing because they don't factor in. When you buy a house, you also have to factor in the fees for upkeep. You have to have money put aside in case the AC breaks, things like that. And they don't figure those things. Like, they think that the house is just going to stay there. I'm like, no, you actually have to maintain it or else it's going to fall. And now they have the surprise Pikachu face, like you're saying. Oh my God, I can't believe I actually had to pay for this and I had to pay for that. And I'm thinking, yeah, not to sound sexist, but I'm going to sound sexist. Like, if you had a man, he would be sitting down with you, factoring in those costs.
Factoring all those costs. Doggone right.
But you know what people don't understand? Even when you're renting, right? You're still paying for all those things. You just don't know it. You're not obfuscating those things. You're still paying for those things. You're still paying for the maintenance. Like you are paying for all of that.
Yeah, it's incorporated in the price of the rent.
Yes. So you're
MFB, I'll buy some acres from you in Mississippi. I sure will.
Right. So
Mississippi and Western Alabama has some cheap land, but yeah, no, I'm good. I like Texas.
Right. So it's funny that people don't realize that. Like you think, oh, I'm renting a 1,200 square foot apartment and I'm paying $2,500 a month. Yeah, you realize that you're paying for all the rent, all the maintenance and everything of it. All that's factored in. You just don't have to make the calls to find the AC guy and a plumber and all of that. You could just call someone else and they do that, but you're paying for it. And it's something that at any moment, if that person decides they want you up out of there, you have to go. And your
Yep.
life is now upended. Whereas when you have a home, you don't have to deal with that.
That's a fact. And you own that home. And, you know, like you said, man, if I write in, for instance, when I had my property in El Paso, I wrote in my contracts just the slightest, you know, mess up, man. I get to keep your deposit. You're, and I'm just hoping beyond hope. You know, I wasn't one of those landlords who spent the deposit. I just wasn't going to do that. I didn't want to put myself in that sort of trouble. You know, just in case they had to leave quickly or whatever. All of a sudden, now I got to come up with the deposit. You know, so I would always keep it in an escrow account somewhere. However, you know, if they messed up, man, you know, they all of a sudden I found out they had a dog. And they were supposed to. That's my money.
Yeah, man. Like people don't understand. You know, building on raw land. Yeah, it seems
Like
really
a
hard to
dream.
do. Well, of course. I mean,
Yeah.
but here's the thing: it's worth it in the end, right? And when you start going through the numbers and you get to the end of the numbers,
Yeah.
I mean, it's not what people think, but they lead you to believe that it's the hardest thing to do because someone else wants to make a buck off you.
Yeah, absolutely, man. They do try and make it seem like it's the most difficult thing to do. And don't get me wrong, it is difficult, but it's a labor of love, man. And anything worth doing is always difficult. So I would encourage people to do the hard thing and and reap the reward.
Man,
Hey,
Jason actually been on the
American
call.
man.
He's saying that I look like a bruised banana. Oh man. Go ahead, Master
American
King.
man. Yep. Hey, if I'm not mistaken, I remember the only really do okay at it are the tradespeople, because obviously in your case, all the plumbing, all the rough plumbing is you. So you shave that cost off of it. Plus you got buddies that know how to lay concrete. So if I'm not mistaken, the only people that really do very well at these build their own are tradesmen, because they're trading back. Does that still exist, or is it not what it is?
Yes,
It's cracked up.
it
Yo, that's
still
a
goes.
fact.
It still goes on. Listen, I have a buddy that's an electrician, and
I'm saying,
when I need to do stuff, I give him a call, and we will FaceTime, as the young kids call it, and he will walk me through it, and I will do it myself. Or see, here's another thing about knowing tradesmen. You cut out all the cost of guys, because you can essentially have that trade guy come in and you and him can do it together. And now you're just paying him and you're getting it at 40% cheaper, and you and him are doing the work.
American man, you know what's also brilliant that we didn't have 30 years ago? We have YouTube. Not to sound corny or what have you, but on the internet, there are so many videos on how to do little things that would cost you easily 100 to 150 bucks. Easily, if you get somebody out.
Yes.
And
Yes.
you can do them yourselves. When I had my house, when I had my bigger house back in the day, YouTube helped me change a drain pipe. Literally, that's how I learned how to do all of that stuff. Whereas 30 years ago, you call somebody, and even though it's a simple task, 150 bucks, and you're forking over the money, not realizing that, dude, I could do this within 15 to 30 minutes.
Let me tell you where I view YouTube as a gift and a curse. If you get it right, you're golden. If you get it wrong, you're paying double or triple.
That is true.
That is where I view YouTube as a gift and a curse. And that's just my opinion. If you get it right, you're good.
Well,
You get it wrong, it could cost you a lot more than you think.
American Man, I always recall hearing stories of a buddy of mine that their family's got an excavating business and they're always doing their deal or plumbing business. But on the side, they're always a new build house. Like it's almost a hobby, but they're becoming kings from doing the stuff that you just mentioned because, their buddy has the excavating company. You show up and plumb the house, and you guys are always going back and forth, doing favors for
Yes.
each other, and just becoming titans at that. Harder to do today, or no? It just keeps on chugging along, but your time is more limited because you're only one person, right? And there's more pressure for you to work more and maybe not do the
Exactly.
side work anymore.
Exactly. Because I have buddies that I work with at United Rentals, and so there are different sectors of that business. You got heavy equipment, you got boom lifts, you have small tools. I worked in small tools, but sometimes I come over and I'd work with them on boom lifts and scissor lifts, etc. And all those guys, man, two white boys, man, they were building their own house, and on their off time, their own houses. And on their off time, they would go and they would build their houses. And they were letting me know where they were. I said, "Oh yeah, I just put the floor in. We just poured the concrete. We just ran the rough plumbing. We just put up the oh my goodness, the frame. We just framed it, etc." And they're showing me pictures. I'm like, look at these white boys, man, and they're doing it all by themselves.
And their wife goes and gets a realtor license too, so even the wife gets in on the deal.
And man, that's a fact. Doggone right, man. It's just amazing. You know what I'm saying? A lot of people are very they're very jaded in that they think that this is impossible, but you cannot do this, and that's the big lie. The big lie is you don't have the mental capacity. You're not physically apt enough to do this. You should give up, and you should pay the banks, or you should pay the big builders to do it, and pay them $800,000, a couple $1,000,000 to build your home.
Yeah, and what they don't understand is you are paying a chain of people. So like
Yes.
so like I work for a plumbing company, right? And they have to pay the company. Now remember, the guy that owns the company, he has to get paid. He also has
Yeah.
to pay me. He
Mhm.
also has to pay for insurance on his company, this and that. By the time you factor in everything, something that may have been 20 grand is now 45 grand.
Yep.
And you could have done it for probably 15 with just material and maybe hiring a plumbing guy that to do it right. Now, I get it. Some people, you see, and this is where people make a mistake, right? People think that hiring a handyman is the way to go, right? Because a handyman is the cheapest route.
You hate them handyman.
No. I don't.
No, I know you don't, but it's just funny when you.
Right, I don't have anything
Yeah, go
against
ahead.
the handyman. The problem is, right, is that certain things you got to stick to the tradesman to do it.
Yes.
And like if I'm building a house, like that's fine. I don't have to have the biggest top brand name company in the world to build my house. But I also don't want to get the cheapest guy, right? And so if I'm gonna have right, and so if I'm gonna build a house, I'm gonna have someone that has been doing electrical work for 20 years come in and do it, right? Like just strictly
Yes.
electrical. I'm not gonna have a handyman come in and do it. I'm gonna have someone that's actually been doing electrician for 20 years. I'm gonna have him come in and skip the company because I know that this guy knows what they're doing.
Yes.
Right? Because what's the saying, right? Jack of all trades, master of none, right? you know, they don't really master anything, and that's dangerous, especially when you're talking about certain things like, you know, the things that can be costly. You get a faulty electrician, and guess what? You're standing on the curbside with tears in your eyes because you're watching your house on fire. You know, and the insurance company looking at you like, yo, what happened here? So yeah, like, you know, you just got to be careful what you do and how you do things.
I agree with that wholeheartedly, man. I agree with that wholeheartedly.
You know, listen, man. I you know, I would suggest people to look into, you know, if you're in the market, look into building your own house. You can build it the way you do it. You can walk through and check things and make sure things are right. I mean, if you know what you're looking for, you know. But
Yeah,
if not, man, you know, make friends of what many of you consider the little guy.
that's
You
a
know, the
fact.
useless guy, right? You know,
That's
you
a
look at the
fact.
electrician and the plumber and these guys, and you're like, oh, these guys fucking scum of the earth. But yeah, like these guys will, like, if you make friends of these guys will help you. I've never seen a tradesman that's not willing to help. I've never come across one.
Hey, you're not kidding, brother. I had the one of the boys on my team. His dad is a general contractor, Mexican guy, and whenever I need something done in my house, man, I just call him. He has a line on a guy he works for, or I'm sorry, that works for him, or that used to work for him, and he went on his own. And I always get premium work, man. Premium work. It's never garbage. I just got to regrout my shower for like $250. I mean, he did such a good job, and then he went in. I have some cracked tiles in my kitchen from the ground shifting, and he went in there, and I had, you have the extra tile from when it was built. He went in there and he fixed that. I was like, wow, man, he did that with ease. Put down the
Yeah.
membrane and all that.
Yep.
Hmm.
Yo, I had to do my wife's grandmother's bathroom, right? Her shower was leaking. Now she's an older lady, 80s,
Right,
like 85, 86, right?
right.
And she had a shower, but her shower started leaking and she was using a tub. Well, my
Uh huh.
wife's father was like, yo, uh, which blacks out, I'm pretty sure I'll tell you the story, but her father
Yeah,
was like, yo, you know, my mother can't be using the tub because she's too old to be taking that high step. You know what I'm saying?
yeah,
And
yeah.
and I'll tell you what happened. I went in, right? I went
Uh
in.
huh.
Well, so I needed a tile guy because, you know, obviously when you rip things, like when you stop, you kind of got to rip things out because we basically redid the shower.
Yeah.
And I went in and ripped everything out. And one of the contractors that we work with, I was like, yo, I need a tile guy. And he was like, oh, you need a tile guy? He was like, you know what? I'm gonna give you the number to the guy we use. Here we go. Like, tell him that I sent you, and he'll come and do the job for you. We redid her bathroom, well, her shower, in probably what, 3 days? Like,
Hey, American man. Hey,
yes,
sorry to
Uh huh.
sir.
interrupt you, man. Hey, man. We're gonna be having a bathroom show coming up, right? Kimmy Cake's gonna be reviewing the bathroom, and she's gonna be offering some suggestions and things like that. And I would love to get you on, man. Like, offer me like some high end things that you've done, suggest some high end things you've done, like when we do the bathroom segment, because plumber is like central to the bathroom. You know what I mean? Even if you don't do the tile, what you've seen other people do, on your jobs, I think would be very like insightful with her.
Oh,
You know what I mean?
Oh yeah, no problem, man. Like I'm willing to give insight. Like I said, man, it's not a tradesman that won't share with you, and so I have no problem giving insight.
Because we have a few electrician thing like that come up, and the electricians, they come on, man. You could do some jazzy shit with the lights, sensor lights. I've been doing a few sensor lights, upgraded light switches and things like that. But the plumbing is really where you can take it to another level. You know what I mean? With water coming from this way, that way. Some of the faucets, because you mainly do high end stuff. It seems like from what I see, um, those type of things. If people who just don't have a lot of money may not be even thinking about the stuff that you may do. But once the plumbing is done, the fixtures, you can spend as much as you like on the fixtures. You know what I mean?
Yeah,
And so
yeah,
I think, like from your standpoint, doing high end stuff, like the ideas. You remember you showed us that bathroom and the controls were on the wall, right?
yes, sir. And the
And
knee wall. It's called a knee wall.
okay, is that what it is?
Yes, it's
And
called a
now
knee wall.
most people who never developed the bathroom, they don't know why those controls are there, right? Most people are used to their controls being right where the shower fixtures are, right? In the typical bathroom. But stuff like that, which is very high end, from my understanding, is for convenience. You can turn the water on without being in the water, in the path of the water, that type of thing. Um, man, I think that would be great for the show. Some insight.
Yeah, man, no problem. Like I said, I'm always willing to help. I'm not, obviously, I'm working during the day, so it would have to be.
Yeah, it's gonna be an evening time show. Like we're
Yeah.
doing a series, right? And it's going to be more or less geared to Airbnb people. So it'll just be you and Kim when we do the bathrooms. You know what I'm saying? You'll be critiquing my bathrooms based upon your experience, what you've done high end. Because with my bathrooms, I try to go a little bit more high end. So that's kind of where you seem to be your wheelhouse from the things you've shown us.
Well, even when you're doing kitchens, John, right? Like kitchens or like saunas, like anything to do with plumbing, I've dealt with. So like even kitchens, when you're doing kitchens, but kitchens are a lot more simple only because you just mostly have like your sink and your dishwasher and your
Mm-hmm.
island sink. You know what I'm saying? So
Mm-hmm.
the bathrooms are more pronounced because you got
Right.
so many more components to it.
Right. Right. And you saw the bathroom renovation mistake I made, right? I don't want to make that again. So someone like you could be very, important, the important piece, for not just me, but for other people that are renovating bathrooms and things you don't think
So are
about.
you going to leave it, John, or are you going to fix it?
Oh man, I'm gonna leave it right now. I got so many other things to do. I'm gonna fix the sink, but I'm not gonna fix the glass.
No, the sink.
Mm.
But again, John, I
No,
told
I'm
you.
gonna move the sink somewhere else. Yeah.
Well, no, John, you don't have to. I told you which sink to buy.
Right, but I'm gonna move that original sink, the one that's in there now,
Oh
to
yeah,
another
yeah,
property.
yeah.
Right,
Yeah,
and
I
then
told
just
you they
put a
got
smaller
the
sink.
yes, they have the rectangle sinks that you hang on the wall, and
Yeah.
that'll work perfect.
Well, that's what I
They're
have now, but it's a little too big, so I probably need to get like a 24 inches as opposed to a
yes,
30. Right.
yes, but they have the smaller ones that you
Mhm.
just place on a wall, and it works. It works just as good.
Yeah.
Works just as good.
I have a wall mounted sink now, but I can't get flush mounted, fixture. It can't be coming out of the wall because of
No.
what's behind the wall. But what I can do is get a smaller sink in this case.
Well, yeah, but they make those sinks to where you can just put the faucet on the sink. Like that's
Yeah.
yeah.
It can't come out of the wall though because of what's behind my wall. I think I got AC stuff behind the wall, so I don't have any clearance for it. Right. So if it can't be wall mounted, but I could definitely have it coming out of the sink for sure. Yeah.
No, yeah, absolutely.
Mm.
Yeah, listen, man, I'm willing to jump on that show. If that's what
You and Kimmy K gonna be the hosts on the. You and Kimmy K gonna be the host on the bathroom show.
Yeah, I'm fine. Just I'll put my email in the back chat here.
Just send it to me. I'm gonna send you my phone number. Just go to my channel and send me your phone number. Send me your email. I'll send you my phone number. We just talk offline.
All right. Yeah. I'll put my email here in the back chat for you. and that way you can email me, and then we'll go from there.
Yeah. And then, yeah, because I want that to be like, if as much time as you have, Kimmy K can do it by herself and give the aesthetics, but she can't give like the technical fundamental, like, could you put a shower head here out of the wall, or you know what I'm saying?
Yeah,
like, in that one shower you saw is curbless, right?
yeah,
And so stuff like that, you know what I mean?
yeah. I understand. I get it.
Hmm.
I'm not. I get it. But so yeah, I was telling a story of when I had to do my wife's grandmother's shower, and yeah, we did that. Like, contractor, I spoke to the company. I was like, yo, one of the contractors we worked for, I was like, yo, I need a tile guy. And he was just like, yo, here's so-and-so number, call him. Called the guy, he came up, looked at the job, gave us a price, got everything done. I worked till goddamn what? Like, because we're in a time crunch because her father flies back and forth to New York, and he was only down here for a week. And so he needed the shower done, ASAP, because he had to go back home to go back to work. And yeah, man, like, I mean, obviously, no, normally I wouldn't do certain things because I don't, I only do plumbing, but obviously because it's my wife's grandmother, I have to do all the extra stuff without like having to involve 30 different guys. And so like I put in the cement board and the mesh and like
Yeah.
everything. Like
I
I
don't,
did it
know,
all.
Blacks, if you, I don't, Blacks, American man, I don't know if you advertise your services, but, I've been talking to a buddy of mine, and he gets bogged down a lot in the construction aspect of his business, but he really wants to be in the services. He feels like there's more money to be made in services. Um, and, you may be in a similar boat in that, you've done a million plumbing jobs, but the value that you bring now is probably in the design and preventing people from falling into the pitfalls of kind of like what I showed you in that bathroom renovation.
Yeah,
Anytime you've been doing
Yeah.
something that long, that value that you have, the skill of it, you can't put a dollar amount on that, like just going out on the job. You know what I mean? Like, you would have saved me thousands of dollars. If I had the shower like I wanted it with the sink that I wanted. And so, I think the design part of it, the consulting aspect of it, might be something it may be viable for you. You're only talking on the internet about bathrooms, and that's a really big part of anyone's home. You know what I mean? Even renters, want to make their
correct,
bathrooms nice. You know what I mean?
correct.
Anyway, just a thought. I didn't mean to belabor the point with that,
No,
but
no, no.
I
I
do. Yeah.
understand. I understand.
Anyway,
Yeah, I mean, listen. You know what? It's funny.
bathrooms sell a house. You know what I'm saying? You know,
Yes,
above
it
and
does
beyond the kitchen.
actually.
You may not get the kitchen right. People may want to put their own touches
No,
on the kitchen, but
Yeah, you
that
can get one.
bathroom,
no,
you can
no,
sell a
John.
bathroom. You can sell a house with
No,
a
no,
bathroom.
no, 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 John. I'm gonna be honest with you. The bathroom and the kitchen actually is the seller.
Yeah, I would say the bathroom even more. Saying like, at least from my business, um, people can work around the kitchen, but that bathroom, like, they want that to be right. You know,
You,
um,
I gotta disagree with you a little bit, John. I think they're both equal. I think the bathroom and the kitchen, because see the kitchen, right? If you ever watch, so John, if you ever watch any of those housing shows on
do it.
HGTV, I don't know if you ever watched them, but
Yeah,
do
yeah.
you want to know one thing that I often hear as a theme
Hmm.
is that people are looking for a kitchen for people to gather and get fat, and they want that to be nice, and they want it to be open,
Yeah,
and they want it to work. So don't make the mistake of diminishing the kitchen. Don't do that, because that's a big part that draws people in, is the kitchen. No, everybody gone. Everyone's silent.
Oh no, I'm here, American Man. Sorry, I
Can you
didn't
hear
mean
me?
to
Can you
distract.
hear me? My bad. I was
Yeah.
trying to talk. I said I agree with that. I agree because that when I purchased my home, there was a certain kitchen, a certain sort of kitchen that I wanted, and I wanted a. And one of the selling points for me was that I had to have a filler, and when they were able to do that for me, I was like, yeah, I'm gonna get this kitchen. I'm going to buy this house with this
Yeah,
particular kitchen.
yeah. I think for homeowners, you got to have both because a homeowner doesn't want to go in and do any kind of renovation, by and large,
Yeah,
right? But
yeah,
for me, where I'm dealing with people that are being sold by the look, that you know they're only there for a short period of time, and the most personal part for them is where they use the bathroom, where they take a shower, and if they have to share with someone else, then they want it to be nice. They may not cook, they may order DoorDash. Hell, in many cases, I don't even offer them a kitchen, but that bathroom where they put their ass on the seat gotta be nice. Gotta be nice. That above their bedroom, they'll almost sleep anywhere. But that bathroom gotta be nice. So that's really what I want to focus on. Since I have you here, the American Man, you're the plumber. I want to lean on you. My bathroom is really nice. I'll even put your advertisement up in the bathroom. While they take a shit, they can read your name on the wall. How about that, American Man?
Wait, wait, what happened? Say that again.
I'll even put your advertisement up on the bathroom. No, actually, what I will do though is put you up on my Airbnb listings if you're interested. If you ever want to start like a design consulting business for bathrooms and kitchens, you know, we renovate a bathroom. You can put your advertisement up on my Airbnb listing where people can call you. They see my Airbnb listing and they stay there or something. And they want to get their bathroom redone and they see who designed that one. They may reach out to you just for a consultation as opposed to you actually doing the work.
Yeah, that's actually not a bad idea.
That's not a bad idea at all.
Not a bad idea
Cost
at
you
all,
nothing, right?
actually. Yeah,
Cost you
yeah.
nothing, right? You know. Anyway, so those are the kind of things I'm really interested in doing, man. Like harnessing other people's skills to, either push their business forward, or, you know, at least give them knowledge where other people may reach out to them, for some of this expertise. Like Master Kim, you talked to CKJ3's relative, right? About the running the liquor store business or something?
Oh, yeah, yeah. And John, if you don't mind, real quick, I did
Yeah.
want to mention that American Man also did comment earlier, maybe about 20 minutes ago, about his initial thoughts about, if you were to buy a vacant parcel and build it out. And he had some very good insight on that. So as Scott comes back for that talk, for that episode, that would be good to get American Man's feedback. And one more thing, too, which is very strange. So as there are fewer and fewer licensed and skilled plumbers, it's been putting more pressure on the plumbers and the electricians. So back in the day, the plumbers and electricians always just had this extra zeal to do side projects, side work. Is that still going on anymore, American Man, because of the pressure with the current job? Do you even have time to be doing side work and side projects anymore, if you don't mind me asking?
Well, there's always time for side work.
Okay. Okay.
Come on, Master Kim. You know how it goes.
Okay. Yep. Word. Okay. Good deal. It did.
But do you do side projects, American Man?
Of course I do. I listen,
Because of
right?
American Man's old school. That's why. That's great.
Yeah, like as much as I like the company I work for, if I had to solely depend on them, things would be a lot tighter than what it is. The side work is yeah. I mean, and I make, like really good money as a plumber at working for a company. But like, you got to do for self, and
Yeah,
I
indeed.
so I of course there's always time for side work. Always.
American Man.
That's it, man. Listen, you know what?
I want to get people away from politics, to be honest with you. To really be, if I could really be honest with you, I just don't think there's any value in discussing it, to be honest with you.
Well, there's no money to be made unless you're a politician. Outside of
Yeah,
that, it's just kind of arguing over what you feel and what you believe.
yeah, and I think it tends to, run people away. The we did the Kamala stream, and I've been thinking about this for a while. But some people came to the stream and they were pro Kamala, and this is I would say probably lean right audience. There's some people that are liberal, and that's fine. We don't run them away, but I think our commentary toward Kamala was not very inclusive of the other 50% of the population that does exist, like it or love it. And so I think there are some commonalities that we can find. And everybody lives in a home, and everybody wants their home to be nice, most of us at least. And so I think I would much rather focus on the areas where we can find common ground. Does that make sense?
Absolutely, John. I don't listen. I don't disagree with you not one bit. I don't disagree with you not one bit. I as much as I like politics, I am realistic in understanding that there's that's one of those subjects where like it becomes very divisive, but ultimately it really doesn't. I don't know. It doesn't really do much. I mean, it does in a way of entertainment, right?
Mm.
But other than that, it doesn't really do much.
I don't even know if people want entertainment in politics unless it's just strictly one sided, like ridiculing the other side. There's not going to be a fruitful debate on politics. This is my opinion. I could be wrong. I can be convinced to change my mind. But that's just my opinion. Mexican, what do you think?
And that's a very loaded question too, right? Because if the topic of the day is Trump or this or Kamala this, it's almost very difficult to avoid at least touching bases on it. But if you could talk about politics just very briefly, because case in point, talking to American Man, this stuff, I mean, I'm literally looking at a 1 full acre and a dope ass subdivision where my daughter's friends live, and I'm thinking for 50 grand, this is dope. Why don't I? This is the American dream to like have a hand in building your own house. So, but then we hear Scott say it's a nightmare, but then we hear Scott saying, hey, it's better to do this. So you kind of bypass the middle guy. So I think that this episode coming up, it's going to determine the future of certain people at a crossroads. Not talking about Kamala or Trump. That's not going to improve or put any food in my family's mouth. And then here's another thing about Blacks Who Defy, right? This is where we need to do an episode with just him because he's got experience with Chinese and Indian and Pakistani manufacturers. And that's a huge part of starting up a business. But there's also a little bit of finessing and hustle in business to get them to produce the samples because they will produce the samples you want. They may not do it for free, but close to free. But the only way to do it is that they think that they're going to get the volume for. I would love Blacks Who Defy to do a show. How did you go to a trade show? How did you meet these people? How did you get them to give you the prototypes? How did you?
Hey, Mexican.
Yes.
You know who we need to bring back?
Who?
Tequila. She's probably back from China now.
Oh, there you go. That's excellent. Is she in the man? Does she got like a business too where she's manufacturing? Please forgive me. This is probably common knowledge, so I hate to sound so insultive. Is she getting stuff made or produced or anything? Or
I think she was going to be buying from them.
okay.
I'm going to text her right now.
And
Matter of fact, damn, if I was on my road, I would call her right now.
And John, the reason I mentioned this, since COVID, we found out a lot of things. Firestone, Bridgestone, all of these American-made companies are all getting their stuff made in China. It's just a matter of what tier 1, 2, 3, 4, whatever, right? So by Tierra, is that her name?
Tequila.
Tequila. I'm sorry about by Tequila's experience over there, but most certainly Black's, who's actually getting stuff manufactured over there. How did he find these vendors? How did they do it? And it's a roadmap because he's in the middle of it, I guess, is what I'm trying to say. That this would be very insightful because that means anyone wanting to produce a product, whether it be industrial, commercial, retail, this would be kind of the roadmap to take. Because they get to bypass all of the localized manufacturing and just go straight to the source that they're getting the stuff made. Because this
Mexican,
guy, yes,
we're gonna bring her up on the show, man, and get her experience in China. Get her to talk about her experience in China.
that'd be
What do you think
great.
about that?
I think that'd
Dealing
be
with
awesome.
the manufacturing and stuff like that. For someone like Blacks who may end up going to China to source some of his stuff as well. Master Kim, the first thing, one of the first question they ask you on Shark Tank,
What's that? I grow
when,
cells, right? Grow cells and
well, that's the first question,
okay.
right? But once they get beyond that, when they talk about scaling your business, the first question they ask you is, when are you going to China?
Okay.
Seriously, that's the first question they ask you. And so for people trying to scale their business, I think tequila would be a very good resource because by the time we bring her on, she will be back from China. She can tell us how to navigate those waters. Does that make sense, Mexican?
Oh yeah, absolutely. And I think it's funny, but thank God she actually went there. I heard the food's horrible, and this is coming from an Asian. I've known Asians that have gone there that other than the vending machines, packaged food like granola bars and fresh fruit apples, they won't eat shit in Shanghai. And this is coming from
Mm.
other Asians. It's crazy. No
We had to
disrespect
bring
for people in
we had to
those
bring
regions.
Philippe back up here. He's been all through China building data centers, so we had to bring him back and let him talk about the food as
Yes.
well. Matter of fact, I don't know
Hey,
why I didn't focus on that with him, but next time he comes up, I'll do that.
hey, John, I threw my email in the back there, and Master Kim, if you feel some need to email me, feel free. If you got a question about something, or you feel like you have a need, feel free to email me.
Oh yeah, absolutely. I just did a screenshot of it, man. Thank you for providing that, sir.
Hey, Tequila just texted me, Master Kim. She said she
Yep.
leaves for China. Sorry about that, Master Kim. There's a little motorcycle going up the street, a migrant. Um, I'm going to ask you, will you come back on the stream and tell us about your trip?
Tell her to be very generous to the chimpanzees that are missing their feet.
I'll tell her that too.
I'm kidding. I'm kidding. That's just from a previous podcast.
Hmm. But yeah, I'll tell her that too. But yeah, I think that'll be good if she comes on. For the people that are looking to source like Blacks, he's one step up next to that, going to China. It'll be good for him and anyone else looking to do business out there. She
So
said yes, for sure, she'll come on.
the inside baseball, and again, please forgive me because it's called different terms in different industries, but Blacks is getting private label made products, right? And these same manufacturers are also doing stuff for Rawlings. They're also doing stuff for some of these other big names.
Yep.
But it's at what tier, and what Blacks was referring to, he wants it to be like tier 1 or 2, which some of the higher level big boys that can command that level of quality. But of course, it's not free, right? But he's wanting better quality. So the point I'm trying to mention is I think that would be a very big podcast to hear what Tequila's trip out there like, and then also, am I over exaggerating? Does she need to be eating granola bars or like made in USA, packed like Frito Lay? I mean, geez, I mean, my boy was petrified, and he's Japanese, and he said when he goes to the big auto parts trade shows there, for one, he gets a little jazzed because a Chinese person can tell someone that's Japanese. Uh, but he said he didn't eat nothing. He said he was sick out of his. He was just very sick all the time because of the way that they prepare the food and all this crazy stuff. But anyways, I shouldn't besmirch them. We all have friends that are Chinese, and so I better be quiet.
Hey, I played that video of the Chinese Uber driver. Everyone has their perceptions or stereotypes, and everyone has their own lived experience. So you go through that. We have the karaoke coming up in about 20 minutes.
Hey,
Blacks, I'm sorry, American Man, go ahead, jump in here. We got 20 minutes.
who? I saw the karaoke thing. How's that gonna work? Oh, you know what? Maybe I'll just watch it.
It's going to be on Rumble.
Wait, is it going exclusively on Rumble?
I think so, because of the YouTube algorithm stuff, the copyright type stuff.
So
So
And
what's
so,
would that be John Galt, Urban
what's the
Landlord on
Rumble
Rumble?
channel? Put it
yeah, yeah,
put it
I
in the
will.
chat.
It's a John Galt presents on Rumble. John Galt presents, so you can find it there on Rumble.
The one thing
Uh,
about Rumble that I don't like is that it's a tad bit difficult to find channels. If you don't get everything absolutely right, it
let me
doesn't
put
come
it in the
up.
chat.
I don't know if you guys ever noticed that about Rumble.
I'm gonna put it in the chat
Oh yeah,
now.
American Man, you're absolutely right. And maybe that's just the unfortunate part of YouTube is such a great engine, right? That all the other platforms are just not nearly as good. But it is another option. But you're right, Rumble is nothing nearly as good to the locator, the way that they stream stuff you
Yeah,
might be interested in. It's like they're the Dollar General of the of the platform. But at
It
least there is a
costs
Dollar General, right?
it
yeah.
costs a lot of money to build an algorithm. I built many of them. It costs a lot of money to build them and refine them, and you have to continuously tweak them, or someone will game your algorithm. So, it's a very difficult thing to do, and that's why many companies, you go to look for a product, you can't really find it, and Google is the best at serving up the products that you actually search for. So you can't get around that. You can't get around that. Go ahead, American Man.
Yeah, no, I was just, listen, John, you got my email whenever, um, whenever you want me to jump in on the show, you do the show, let me know in a reasonable time, and I will, jump on and give critiques and give my opinion of what I think for, whatever it's worth. And
Yeah, we have some bathrooms that are already kind of in flight. They're already done.
yeah,
But we're going to be doing some new bathrooms. As I said, for most people, again, the kitchen is the most important. But for us, the bathroom is most important. So, we're going to be doing some updating of bathrooms, new bathrooms, stuff like that. So, some kind of like green, what do they call it? I guess a green room or green floor type development. So, it'll be something interesting, I think, for most people to see.
you know, you would be surprised, right? You would be like, so, and you were talking about the consulting thing, right, John? And it's funny because you would be surprised how much time I spend with a contractor and a homeowner answering questions and laying things out and them asking what, what do we normally see? What looks good? What have we seen? And this and that, and I mean, so you remember that bathroom that I showed you with the body sprayers and everything, John? You know, the GC and I actually spent the GC and I spent an hour and a half with the homeowner just going over where they wanted everything laid out.
Yeah, it's a lot of time you spend, not actually doing the work.
And here's the thing, technically I'm not supposed to be doing any of that. right? Like I'm just supposed to come in and do the work. I'm not supposed to be talking to the homeowner and them asking me and this with the GC. I'm not supposed to be doing any of that. I'm supposed to come in, everything's supposed to be laid out, and I'm supposed to go. Yet I
Yeah.
have to spend so much time talking with people and dealing with the GC, and it's that job took me 3 days when it should have took a day and a half. And the other day and a half was just spent waiting on the contractor and the homeowner. And that's how most of those jobs go. And it went like that in New York, and it goes like that in North Carolina.
Yeah, now I can believe it. Hey guys, we're up on the 15-minute mark, headed to our I guess our initial installment of the John Galt Presents on Rumble, our karaoke night. Let me make sure. I think we're going to be streaming from this channel. I don't know how Porsche is going to have it set up, but that is right. It is set up for 9 p.m. So you're probably able to watch it on YouTube. I'm not sure, but I know you probably should be able to find it. Let me see if Porsche has it set up on Rumble. American Man, I hope you make it over there. I see Master Kim has subscribed to the channel. We may start streaming simultaneously on Rumble for the people that like Rumble.
Well,
Let me.
well, John, what you should do, right, is that you should do a little bit of the streaming on YouTube to start it before all the music and everything starts,
Oh yeah,
and then
yeah.
just spam
That's
the
smart. Very smart.
Rumble, just spam the Rumble chat so that people know where to go. And then just make it known, hey, we're gonna go over to Rumble here in 15 minutes, 20 minutes. And
Yeah.
that will get people over there.
Yeah. You know, we're working out the strategy, man. We got a lot of things to kind of like make a little bit more concise. You know, like the Airbnb bathroom shows I mentioned to you. What I would like those to be is, you know, much more concise to the topic, and that way it'll be much more fitting for people that may look for it 2 weeks down the road. They
Right.
don't want to hear the banter, but just want to hear the initial review of a bathroom, review of a bedroom. So that's what we're looking to do. And more shows like this with Master Kim, where it's just one or two people up and then you can come up and ask questions. But, you know, not have a panel full of people talking to an expert on a certain matter. You know, we
I
don't need that
agree.
back and forth, you know. So
I,
we need,
I
you know,
agree.
people that are trying to use the insight that the person is giving to, you know, take it to another level or do what they're trying to do, as opposed to debating with that person. So that was kind of the reason for this format here. And so I hope you guys enjoy that.
Yeah, it was. Listen, I had no problem with it. You know, I understand because I to me, like I'm not. You know, I understand how things work, so I get it. Uh, did you get my email, John?
Yeah, let me go ahead and send you the email now.
Well, you don't have to.
Mess.
I'm just asking if
No,
you got it.
yeah,
Like
oh
that.
yeah, I
That
got
was
it.
my whole thing. Okay,
Let me
that's
send
it.
it to you
Like,
now. And you
right.
guys join us on Rumble or check us on YouTube. Hell, maybe on YouTube. I'll find out from Portia where exactly it is, but I know it'll be on one of
Hey,
the two.
I'm here. I'm here.
Okay, there you go.
No, I got your text when you let me know that you confirmed it. So we have to wait
Yeah.
24 hours.
Oh, is
So,
that right? Damn, it's 24 hours.
yeah, you gotta wait 24 hours. So
Damn.
after 24 hours, so what time is it right now? It's 7:49. So around this time tomorrow,
Okay.
we'll be able to start going live from Rumble. And so what I'll be doing is I'll be connecting the Rumble to our StreamYard account. And so you know how whenever we set up the streams,
Mm-hmm.
we have the two different John Galt channels that we stream from. We'll also stream, well, because Twitter is gone now since they're making us pay.
Oh
But
yeah, that's right.
Rumble's not making us pay, right? So we'll be able to stream from both of our YouTube channels as well as our Rumble. So that will start. I mean, I'm pretty sure we'll be live at that point tomorrow. So more than anything else, we'll be streaming live from Rumble starting on Saturday. And my goal with Rumble, and I hear, the different feedback and things that people are saying, but Rumble is such an incredible platform, in my opinion, because it's new, it's growing. They don't have a huge team. They're not YouTube, but at the very least, let's get ourselves out there. Let's get ourselves on that platform. And so people, because there's a lot of people that just quite literally don't use YouTube. And Juan Pacheco is one of those people. Joe Mobley is one of those people.
Yeah, that's true. Yeah.
Yeah. And they have pretty big followings on Rumble. So it's just like, while we're at we're about to hit 800 subs, but let's go ahead and get on Rumble so we can, bring in the Rumble audience that's all about free speech. And of course, we're not going to X out YouTube, not by any stretch of the imagination. However, we will be streaming from multiple platforms, which is going to give us more visibility. We want. And so whenever we want to, just like John, how you like to talk about COVID.
Oh yeah.
Yeah. So we can stream on YouTube and Rumble at the same time up until YouTube gets us up out of here. But on Rumble, it's full, it's wide open. You don't have to worry about any of those things on Rumble. Rumble is such a great platform for free speech. And you don't have to worry about copyright. You don't have to worry about any of that. And then as far as monetization, Rumble, you don't ever have to worry about that on Rumble, monetization. And you get more in return than you do on YouTube. So there's so many great things with Rumble. I know it's a new company. I know it's not as cool and as sleek and as easy as YouTube. However, what we have to do as a team is we're just going to have to spread ourselves thin. So we're just going to do what we need to do to get our names out there and, attract people to the channel. Like tonight with Scott Linton and Master Kim, it was an incredible show. And so by Saturday, we should be streaming that way. And then for the people that are in the building right now, hi, Virgo. Hi, Virgo. Okay, so for the people that are in the building right now, we're going to be doing the karaoke stream tonight. And
hey, how are we going to do it on YouTube without them flagging us?
Okay, so the way that it's going to go on YouTube is we're going to use the copyright-free instrumental platform for YouTube. So we'll be, whatever songs people want to sing, perform, we'll be playing the instrumental versions. So you'll be singing over them so we can host a live karaoke. Now, right. You can actually do that. Like I was talking to HB earlier and we, kind of went through the fixins for what it takes to do it this way. So instrumentals, and we're going to be singing karaoke over it. Now, of course, the instrumentals would be a lot better on YouTube, but you're just going to get the regular old YouTube karaoke versions. And so we'll be doing that. And that's going to be after Grace's dating show. So we'll be tuning into her dating show. And John,
are we going to stream that from our channel?
Yes. Hey, Lolo. So what we're going to do is we're going to be streaming Grace's dating show. And we have actually a few people from our channel signed up to be on Grace's dating show. So we want to show them love and support. And I know it's going to be quite interesting. And so after Grace's dating show, all the folks from Grace's show, the Princess, their producer, I finally got in touch with him. So they'll be sending everybody over to us for our karaoke. And so anybody can participate. So just for the audience right now, anybody can participate whenever we start our live stream. If you want to participate in the live stream, I know everybody doesn't always get it and everybody doesn't always understand, but you need to type in the chat karaoke and karaoke with the song that you want to sing, and I will be adding you to the spreadsheet. So I know who's next. Me and Crack know who's next and who to introduce and all of that good stuff like that. And so that we can also have your music ready. Now, this is our first time doing karaoke night. I came up with the idea, about a month ago. So now we're going to test it out. And so, we might have some hiccups here and there, but we're live. So You guys come on in. If you want to actually get up and sing, hey.
The first two did.
You come in and you sing. Solid Snake, you are not blocked. We can see everything you're posting. So you'll come up and we'll just go in order from the people that post. And you guys will be able to sing and put on a show. I'm actually thinking about singing too. So, it's all fair game. But tonight we're just going to go through. We will have our top 3. We will have our ratings 1 through 10. And we're just going to kind of see how it goes, what the flow is, so that we can make this a regular segment, a regular staple. And so the next time that we have this, we will have cash prizes where people can actually put money into the pot. In the first place, second place, and third place winner, they'll be able to walk away with a cash prize. So that's the goal. But we're going to test it out tonight. And whomever calls in and sings, I just want to let y'all know right now, in the event that I'm going to get up there and do my thing, I'm ready. I'm ready. So y'all need to be ready too. So it's going to be a great time tonight. I'm absolutely looking forward to it. It's going to be a lot of fun. So we have so many different things coming up for you guys. Y'all have no idea that you're here. And keep on coming back. And if you haven't subscribed, subscribe.
And if you haven't contributed to support the show, you got to feed what you love and what you want more of. So make sure you donate to Portia, HB, and of course me, John Galt. We've been here like 24 hours right out of the gate almost.
Yeah. We're here.
We see the views, we see the lights. So, make sure you support the channel. It's very important.
We see the watch time. We see everything. And, again, y'all may not quite, if you're not a YouTuber yourself and you're not a content creator yourself, you may not realize all of the work that goes into it, but there's a lot of work that goes into it. And so I appreciate you all for just being here more than anything. It means a lot. It means everything to me, and I know it does to John and as well as HB2N. And give crack. Get and give crack. Don't do crack. Don't smoke crack. Don't do it. But crack, he is absolutely phenomenal. And I just want to give Master Kim, I've already sent him and Scott an email thanking them for their contribution tonight. But I do want to continue to work with you all so we can foster a business relationship so that y'all can come back and do it again.
Crack, he comes up, talks about stocks. He's not selling anything to anyone. He's just giving you advice. There are not many people that are going to be benevolent like that. If he had, most people, if they had a secret method of how to do something, they wouldn't share it with anyone. Mm-hmm. But he has a sincere interest, in my opinion, to try to help people, take that next step. And you just don't find many people like Crack willing to volunteer time.
Yeah.
You've seen him on other streams where he volunteered money. And I think he was doing it to help the people more so than for an attention, because you saw him last night. He wouldn't even get on camera last night. As much money as that man is giving to streamers, no one even knows what he looks like. How many people would do that and not demand some type of recognition?
And he mentioned today about doing a face reveal, and HB and I, we were talking about it, and I don't know, maybe Lolo, maybe maybe Virgo, maybe I imagine the women may know. So there's someone on YouTube called the Indian Dad. So it's Sheena Melwani, and she's Indian, and she's an incredible singer, but she has this huge YouTube channel, and her husband has always been faceless. But anytime he comes up, nobody knows what he looks like, this and that. But they had a goal to, if they hit this certain amount of subscribers, they would do the face reveal of her husband. And I can tell you, once we hit the goal over there, and they did the face reveal of the husband, it was just like, I just rather have not seen it, right? But what you can tell is that they noticed it too. And so now they just keep him in the background, right? So like if you go back however many videos behind and you see his face reveal, that's fine. But with Crack, it's like, we don't even need to see your face. You don't have to do a face reveal. We don't need that. Like the mystique of you is enough. And I bring up the Indian Dad because it's just like, oh my gosh, their content is incredible. I love their channel, and it's just so funny. And he's in, the Indian accent, just like, is it Varun? just like Varun. It's so funny. So it's just like,
Oh
okay,
yeah.
yeah, it's so funny. So it's just like, no, just be in the background. It's just fine. Crack, it's okay. Nobody needs to, you don't need a face reveal. You don't have to do that. But if he wants to do that, of course, by all means, do what you want to do. But Crack, he does just fine as he is. And we love him and appreciate him for all that he does, especially at night when I'm asleep, John, whenever you fall asleep. And for sure, I know without doubt, HB is actually sleeping because he has to get up early in the morning. So I will be up tonight. I do have one more game left, so I'll be at work for a while. I just stepped out from the game so I can talk to you guys for a bit, but we will be going live in about an hour.
Oh, it's time. Oh, wait a minute.
Hold
It
on,
looks like he said. It looks like.
Oh, is it? Oh, you see, I always get confused with the Central and Eastern, so I guess we're about to go.
Hey, Portia, is Get Cracked that hideous? Nah, I'm just making a joke.
No, I would not say that. I don't know what he looks like, but I don't care to know what he looks like. He's a good dude.
It was just a joke, Portia. I wasn't like serious.
Yes, American man, formerly known as Black Thoughts.
Formerly known as Portia, I would just say, right, well, first of all, I want to say thank you for all the work that you do, because you do put in a lot of work and you do need to be recognized for that. And everyone, hit Portia's Cash App. Hit Portia's Cash App for all the work that she does, because she does a lot of work in the background to keep this working. I would just say be careful who you get in bed with, as far as like with the Thorpes and all of that. And I'm just gonna say it boldly. Just be careful.
Well, I understand. Like this at night, Crack, he has. I'll just say this, for those of you that do not know, I love white people drama. It's the best drama in the world to me. Like, it just really excites me and I'm very entertained by it. So like, I really love it. However, we had Ava on the Whatever podcast. You know, we love Ava. We support Ava heavily over here. But we had this morning, whenever I woke up, it was like Grace and I can't think of the other girl's name right now, but Grace is doing a dating show. And if y'all haven't seen Grace's dating show, this is no slight to anybody. Grace's dating show is incredible. Incredible. It is so much fun. It's so funny. And I've only seen it once, but I was hooked from the first time. It's just a lot of fun because I'm thinking it's the princess who's the Joker who does the AI thing, but it's so funny. It's so funny. So we'll be tuning into that. And at night, you know, it's just wide open. We're hanging out at night, but in the morning we have our professional business type, you know, news, political updates, things like that. And of course, still be yourself, but we'll be talking about more serious topics. But this is Give Cracks. This is his brainchild with the, I like to say, the white folks drama. And for me, my brainchild is the karaoke. So we're just going to test it out tonight and see how it goes. Hopefully it goes well. I'm looking forward to it. And so I want you guys to call in, you know, be in the chat, tell us what songs you want to sing and give us your best shot so we can just kind of see how it goes. So I think that's all I got.
I have nothing else. I'll talk to you. I'll see you on the other side.
All right. All right. You guys have a great night.
Oh, Mavitt said the clown's not princess. Well, Mavitt, who is it? Who is the clown? It's like a Joker. It's like the Joker. So whoever the Joker is, and so it's like he's sitting at a desk and he's talking to the date, and then the Joker gets up from the desk and he goes over to the corner of the screen, and it's like he's actually dating, like doing like a real date, but it's I don't know what it is. I've never seen anything like it, but it was absolutely incredible to me. And I've only seen it on Grace's, Thorpe TV. I've only seen it there. And I was just extremely impressed because it was so cool to me just to see that. And as much as I love to do graphics and stuff, I'm not at that level. So it was like the Joker, the whole entire Joker outfit, and the words that the Joker was saying, it like, whenever his mouth was moving, it matched the word. It was crazy. It was insane. And I just really enjoyed it. I really loved it, and it made it really funny for me. Now, of course, what I find funny, everybody else might not find funny. However, I'm about to end this stream, and we're going to go ahead and head over to the next stream. So you will see the next stream. If you go to John Galt, you will see the karaoke stream. So you guys all head over there. Let me post it in the chat for you guys really quick. You know, some of us are lazy. For those of us that are lazy, I'm going to give you a hand. I'm going to give you a hand. Let's see. Copy. Let's see. Please join the next stream. All right. I just posted it in the chat for you guys. So y'all go ahead and head over. Thank you all for being here tonight. And we'll see you over on karaoke. And again, type in the chat if you want to participate, your song of choice, and we're going to get it rocking and rolling. And we're going to be tuning in to Grace's dating show. So see y'all in the next stream. Thank y'all for tuning in to our business talk. Shout out to Master Kim for always blessing us with gems. Master Kim he's one of a kind, and he's a good man. He's a good dude. I have nothing but the utmost respect for him. And Scott Linton, shout out to you for even showing up. So I want you guys to look forward to future streams with Scott and Master Kim and other people. So Portia's work must receive a blessing of support. You too, John. Hey, Solid Snake. Love you. We're about to end, and I'll see you on the next one. Bye.